it used to be. There is a structural shift that has happened in the sector. And obviously, as you rightly said, we being the largest hospitality ecosystem player in the sector, we are benefiting from that kind of growth. And from our own point of view, we have changed the business model and we have driven our growth and our pipeline by geography, by contract type, and by brands in such a way that we are able to hedge against any kind of headwinds that come and have come. I mean, this financial year, April started with Pahalgam, May we had Operation Sindoor, June we had the airline accident, followed by turmoil in the Middle East, then later in Bangladesh, flooding, landslides, everything happened that one could think of, but still the sector demonstrate 17% growth for the first 9 months, higher and higher every quarter.
Yeah, that's true. I mean, but there is also this support are going through the roof, so maybe that also puts in a little bit of that gain. But I read low teens growth for the March quarter and beyond. Are we reaching a period of time? Are we already at that stage now?
I think we did not say low teens. We said anything between 8.5 to 10% on RevPAR, but total revenue, what we said is between 12 to 14%. So I think that is quite a healthy number to get to because the base has become so high. So in a way, with very strong performance on the Taj brand, if you keep doing 8.5 to 10%, on a base of 22,000 rupees, that's not bad. That's quite a good level of growth because higher the number gets, the higher is the flow through to your profitability.
Got it. I mean, I think when I look back at least the journey in the last 5, 6, 7 years, Mr. Chatwal, one of the key differences has been that you've become maybe asset light and maybe managing a lot more hotels. Now, suddenly what I'm seeing, and maybe I'm wrong here, but what I'm seeing in the last 12 months or 18 months is a bevy of inorganic moves that you're doing. Are these properties or assets available at an attractive price for you to be doing this? And does this last well into the next 12 to 24 months or longer?
I hope it lasts much longer. So I think firstly, we had to go for a very good capital structure, especially post and during COVID when our revenues dropped to zero. That's one. Second is, as I mentioned, scale boutique properties or mid-scale mass brand, which is Ginger, then scale is critical. Otherwise, you should not be in that business. If you cannot scale to 500 hotels in the next 10 years, we should not be doing that. Similarly, if you're in a homestay, if you can't scale, then that also does not make sense. So I think the moves that we have made is after that has become an enabler for us to go for attractive and also to add brands. I mean, we were able to add is happening through the diversification of brandscape without losing globally also more significant. Next month we'll open in Frankfurt. We just opened 2 properties in Bhutan, and Frankfurt will be followed with a safari at the Kruger National Park in the month of May or June. So I think all in all, we are pleased with the growth that we have had and the prudent moves we have made both on the organic and inorganic front.
Mr. Chatwal, one more question, and maybe a strategy question. I'm just trying to get your view here. And maybe because the hotel industry has been so cyclical, sometimes it surprises as to the stability that has come in the recent few. But as I look at your product suite, between geographies, between business segments, between brands, and you know the revenue drivers as well, between revenue drivers, there seems to be this very strong effort or thought process in diversifying everything so that if something were to go wrong, the other thing makes up for it. Are you kind of pursuing that kind of strategy so that you can have steady growth, maybe lower growth than what might happen in a particular quarter here and there, but a steady growth which may last for long?
Absolutely. I don't know my compliments for having, you having guessed that so beautifully. The idea has been to remove volatility from the business so that we are less cyclical. And that's what I meant, the diversification in the brandscape, the diversification of the top line. And also, when you're a 120 plus year old company, you're sitting on many iconic assets. That's where asset management becomes so interesting, that you can use all the spaces that you have and run your imagination, and with very small moves, you can make some magic happen. And one of the private membership club, which drives almost through the new memberships, which is to 40% margin, helps you to protect using that art and science of growth.
Got it. My final question, Mr. Strain, even now for the foreseeable future, could it happen that you might still do this low teens and EBITDA might scale up faster if all of these things happen? Is that a possibility?
Yeah, I think very important in our investor presentation, we gave something which I'll share with you. You have to look at the growth over the last 5-7 years. So what we have given in the investor presentation is high teens growth and almost close to 17-18% EBITDA growth on a CAGR basis, not on a quarter-to-quarter basis, but a CAGR of last 3 years and 9 months we have provided. And if we look at the last 7.5 years, we have gone from 150 hotels portfolio to 600 hotels portfolio, a 4,000 crore consolidated revenue, marching and forging ahead towards 10,000 crore revenue. So I think if we don't take a quarterly view, rather a holistic view of what has happened and what is expected to happen, given the guidance that we have provided under Accelerate 2030, we are very much either in line or ahead of our guidance.
Well, that was IHCL and the management in terms of the Q3 conversation. Let's pull up that stock also very quickly, see what it's doing, and the future. What Neeraj spoke to Mr. Chatwal, Natwarlal and Sons stockbrokers at this point of the show. Samir, good morning and welcome to the show. Just largely a quick view on Indian hotels. We've seen that space expand meaningfully in the last 2 to 3 years. Lot of new listings, but do you think that it's one of the better names in that space? And what is your pecking order in the hotel space?
Yeah, so obviously it is the best name in the space, right? At 600 properties, that's what Mr. 1,000 properties over the next 3 years gives a huge runway for growth, right? Now you got to look at this business model a slightly different way. It's a consumption business model. So additional cost to have that set 15, those other 15% occupancy. So continues. I think Indian hotels is something that could re-rate in the future further higher. So this is a buy.
From Lalita from Bangalore, and it's on BHEL. She's holding 200 counter going forward. Any view on this, Samir?
The positives, a lot of the upsides have been priced in. There's also a overhang of an OFS expected sometime over the next near future. So if something of that does happen, that kind of increases the supply, and then the stock would probably be in the down. So for me at the moment, it's an avoid.
Got the view, Samir. But let me also welcome in Rajesh Bhosle at this point in time, equity, technical and derivative analyst at Angel One. Rajesh, good morning and welcome to the show. This first question, from V Murli is for you. It's on Muthoot Finance. Now, stock is down and out today post its Q3 earnings. Now, he's bought it at 3650. What should he do over this with this particular counter over the next 3 months is what he's
Structure of Muthoot Finance on the daily chart, we can see a double top around 4100, and the kind of selling we are seeing in today's session, there is a bearish structure of bearish kicking. So in the near term, we expect weakness to persist. So possibly the stock can slip further towards 3400, and maybe even if that is broken, the stock can slip 31 towards 3180 levels. So if he is a short-term trader, I would suggest him that in the near term, underperformance is likely to be there. So exit on any bounce.
The next question is on Craftsman Automation then, and this is from Ellen Parke. He's asking if he can buy into this particular counter. Rajesh, let me stick with you. The stock's done very well. What would you recommend?
I'll suggest him to wait. The stock is facing resistance around 8,000 level, 8,050 levels. Once that is crossed, and once it sustains above that, then buy for targets of around like 9,000 odd levels, or else wait for a dip. On a dip, if it dips towards 7 trading zone, buy around 7,200, or wait for a confirmation above 8.
Let's pull up that stock. Was in focus today again on the back of earnings. Now, in the price that we were expecting, that the Oswego fire has had a major impact on what lies ahead in terms of the recovery in Oswego. Apart from that, we also to almost 59,000 crores as well. But let me welcome in Mr. Satish Pai. He's the managing director of the company. Mr. Pai, thanks so much for joining in. Let me actually start off with the point that I was making on Oswego. When is it expected now to start, since you are in a recovery phase? In terms of the cash flow for you, with what we expect in this quarter, in the next couple of quarters as well.
The first point I wanted to make was that Novelis actually had a very resilient Q3, taking out the impact of the Oswego fire. The rest of the plants were running well. Demand was good. Their EBITDA per ton was close to $500. So overall, Novelis' underlying business is doing well. So the Oswego fire, we declared that the impact would be around 1.3 to 1.6 billion from a cash flow point of view. We think that the mill will come up by the middle of Q1. And I think that we have been mitigating the impact of the Oswego fire by doing interregional shipments, buying from third parties to take care of our customers. So I think that by Q1 of next year, we should be hopefully out of the Oswego incident.
But Mr. Pai, in terms of the Oswego plant, what impact do you expect of that in the near term? Maybe in Q4, is it expected to be a little more weaker in terms of the impact, and that could be the peak? And how do you see the recovery of that in terms of your insurance as well? I think you have spoken about it. You mentioned that it's going to be a gradual process, but what are the timelines, if you can give us some perspective?
So the first point is, from an EBITDA impact, Q4 will be more or less similar to Q3. From a cash flow impact, the cost to serve will come in Q4. So I think that the last question you talked about was from an insurance point of view. We are well engaged from an insurance point of view. It's a gradual process. Money comes in tranches. It's not like a cliff when it comes.
Increased substantially by almost 18,000 crores on a quarter-on-quarter basis to 50. Working capital largely being reducing for both Novelis as well as for copper, and I'm guessing the P, because we've seen those prices continue to be in an up move. How would we see
the next 3 to 4 quarters are going to be where the net debt to to start. So I think that, the next 3 quarters are very important to us from a cash flow and a debt point of view.
The one silver lining, Mr. Pai, in this results have been the aluminum, the EBITDA per ton. Now, you've seen it roughly around $1,563. Now, India business has done well, but it's largely flat on a quarter-on-quarter basis, despite that. And how do you see this, for the domestic prices also as they continue to rise in quarter 4? Should we see that benefit translate into earnings of quarter 4?
I think broadly quarter 4 EBITDA per ton and the quarter 4 EBITDAs will be better than Q3 because the aluminium prices are higher and we have got 1.5 months under our belt. I think that also includes the impact of our alumina sales, and alumina prices from the $500-600 have sharply come down to $300. So you're seeing that impact as well. I think the upstream EBITDA per ton has been going out with the LME, but our overall aluminium is a mix of our third-party alumina sales as well. And I had called out some of the RPO one-time impacts where we had got a write back in Q2 if you go back and look at the transcript. So I think all those put together, you have to take into account to look at the overall EBITDA per ton.
Well, Mr. Pai, thanks so much for joining in, giving us time here at NDTV Profit. We wish you the best. Look forward to our next conversation and a better quarter 4 performance, of course. But be a meaningful opportunity to look at, or
is going to continue for very, very long. You're buying. What happens when the China supply starts coming into the market a lot faster? Right now, they're out of it. But the management also right now said that they are in the capex phase planning, and then you're servicing that debt a lot longer than you want to. So for me at the moment, commodities is an avoid. Hindalco likewise. But if you have to pick one between the two, I would pick Tata Steel and Hindalco, because if commodities move up, these guys are vertically integrated and will get the biggest benefit of all of the upside.
The next query is coming in from Vivek. It's on Kalyan Jewellers. He wants to know whether can he hold this counter for the next 5 years. Samir, any view on Kalyan Jewellers from next 5 years point of view?
Yes, absolutely. So last week we were on your channel as well, and Kalyan Jewellers had come up, and that time that stock was 360. The results weren't out, and we had a positive view. The results came in fantastic. The store expansion, they're targeting at 100 stores plus here. And then another 60 Candia. So you're talking of great expansion through the FOCO model, that is the franchisee-owned company operated. Cash flows are getting better. Debt is going to start coming down. Yes, valuations are a little rich, but then if you compare them to the largest player in the industry, Titan, they're much lower. So from that perspective, little comfort. But yes, long-term, 5 years, hold on.
Got it. Well, Samir, we have to ask you on Kalyan. We have to ask you on another stock, which I'm not going to name, and wait for that query to prop up on my screen. But the next question is on KPIT Tech. This one's also a one-year view. Samir, what would you recommend? Because, this is from Ekambara, and he is continue holding this counter also. Is it worthwhile to average down, catch the falling knife? What would you recommend?
So 73 years of age is the one deterrent that tells me to average. But in general, look, KPIT Technology is a company that we think has good growth opportunity because of the amount of is just creating havoc. If you have to differentiate, KPIT Tech is one of those counters by the AI. So for me, it would be an average, but because of his age of 73, back to 1300, but we are positive. We do have a view that the stock would probably be around
rapid fire in this edition of Fast Profit. You both know that we'll keep your answers on buy, sell and hold. Deep from Kolkata is holding shares at 435. Rajesh asking for a very short term, 1.5.
971. Rajesh, any short term view on this?
Hold on to it.
Yes Bank is the other one. Samir, our viewers, Prashant is asking if wants what kind of return can you expect from Yes Bank in the next 3 years?
15% CAGR returns, hold on.
Technical view here.
Wait for further dip.
The next one that's coming in is on IOC. Now, our viewer Satyan wants to know if he's holding at 130 rupees. Should he continue to do so, Samir?
I would say book profits.
Any view?
Not tracking this counter.
The next one's REC. Samir, would with the arbitrage with PFC, would you recommend Ridha to switch to PFC if she continues to hold this space?
Well, yeah, I mean, because of the arbitrage, yes, but then if she's making money at this point of time, then you pay the tax, so then it doesn't make sense. So it depends on where you bought it, but both the counters
So 365, sorry Samir, but 365 is what she bought it at.
Then if you're making a loss, yeah, go ahead and do the transaction. You're actually making a loss and getting it.
Yeah.
Ishwar from Kolkata is holding few shares of Acuitas Chemical at a price of 1,728. He wants to know whether should he continue to hold this counter for long term, Samir?
Unfortunately, no view, sorry.
Rajesh, any technical view?
No view.
Tata Chemical is the other counter. Samir, our viewer, Manoj has bought it at 1290, asking a long-term view.
Yeah, he's bought it at the top. I would say add on here. Unfortunately, you're going to have to average and you're going to have to wait with buy.
Tom Varghese is holding 100 shares of Sterling Wilson Solar at a price of 231. Should he continue to hold this for the next 12 months, Samir?
Yes, and
What would you recommend?
Hold on to it. Exit on a bounce towards 3.
81.2 rupees for short-term target, Rajesh, on this.
yes, I think we can buy some more, but I mean, look, it's going to be a slow mover. So if you get,
He wants to know whether should he continue to hold or book partial profits.
First half of this edition of Fast Profit, but Samir, we'll let you go on that note. Thanks so much for joining in and helping us with your answers. But Rajesh, stay on. Lot more stock-related queries on the other side. Stay tuned to Ask Profit.
Presenting the all-knowing, Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected eco. Tech 360. Real talk, real reviews, tech that you can actually use. Tech Show.
Hi, this is Keshav Zekol speaking. He's not around right now. How can I help?
It used to pester you, it used to irritate you, it used to be something that you didn't want. This is a massive pain point in India, by the way. Phone spam.
Tell me a bit about Equal AI. Tell me a bit about your journey here.
Being a third generation entrepreneur or from a family business and wanting to build your own company, the reality is a challenge. AI, we built something interestingly where you can it'll pick up your phone for an unknown call, speaks on your behalf, then connects the call to you, saying this person is calling for
Came out. How are you looking at these fast-paced developments? Because business can be running a family office or being in question and
it's
conversation.
Not much work, by the way, if you're just in the family office.
It's not much work. Okay, so I know it's
You actually building a company.
Solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I matters and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market.
Alex Matthew. Markets, mutual funds, insurance, personal finance. I help.
He has been tracking markets for over a
Welcome back to Ask Profit right here on NDTV Profit. If you haven't already, do keep sending in your stock on the top of your screen. But before we take all the stock related queries, time now to take a...
And you just see Bajaj Finance after that AI con call, they are still in the green, that's it. And largely we see the key important levels, which are the support levels, are that they are coming down. And let's just pull out the stocks to give you that entire picture. Only SBI is holding up, apart from by convincing out of these two. Also looking at the other stocks, that's the short covering. Cummins India and IRCTC make it to the list, and the long and winding ones, it's largely sell-off has intensified. NMDC and Hindalco, that's what you're looking at. And lastly, the short build-up stocks, this includes Muthoot Finance and KPIT Tech. It's one of the largest banking. So, of course, it seems like a repeat of what we saw yesterday. But yes, markets are seeing lower levels expected to come down going ahead as well.
Coming in, let's move on to our next queries from Suresh from Ludhiana. He wants to know whether is it the right time to enter SBI for a period of 2 to 3 years, or should he wait?
Somit, sorry, I missed the stock name.
SBI. He wants to know whether should he buy right now for the next 2 to 3 years or wait for some correction.
For SBI, I think, Somit, I won't be able to comment on that because of...
I'm so sorry, I just missed that. I just missed that part. Rajesh, do you think of...
Wait for some dip. If it dips back towards 1100, that could be ideal levels to buy. The stock has already seen exhaustion move, and 11.
But we have a caller coming in from Bengaluru, and Venkat has a stock query for us.
Currently, I'm having profit, so my doubt is that
firstly, many congratulations. You bought it at a very attractive level. Stocks up almost 2 to
half year or something like that, 1 year above.
Got it. And
average it.
Well, it's all right, Venkat. You got it at a decent price. Let me go to Sunny again. Sunny on MTAR Tech, because he's bought it at 1500, holding 30. Defense name, or should he continue with this one?
I think we have seen a fabulous recovery in the earnings of MTAR Tech, and that is the reason we have seen a kind of re-rating also. So company is back on track as far as growth is concerned, with an India-US trade deal already in place. I think there was some overhang in terms of growth pertaining to the US business, and now that is behind us. So I think going forward, the company should do well. But since the viewers have already made a decent amount of money, I think at current juncture, one can book profit in MTAR Tech. and shift to a larger names like BEL, where we feel the valuations are still attractive and one can look forward to a 15% gain as far as BEL is concerned from the current market price.
Right. The next query is coming in from Sunil from Mumbai. He is holding 125. Any stop loss here, Rajesh?
So I would suggest a stop loss around 1250 levels, and on the high side, immediate target should be around 1480. Immediate resistance is around 1400 and then 1480.
Got the view, Rajesh. But the next question is from the pharma space, and Avdesh Oja from Delhi is holding Sudeep Pharma at 552 rupees per share. Sunny is asking, we should continue to hold this counter, or would Natco Pharma be a better pick for the long term?
I think I would recommend to continue to hold to Sudeep Pharma, a very niche business as far as pharma segment is concerned. So they supply excipients, and the operating margins are in the range of 30%. And at the same time, the battery chemical vertical is likely to go on stream next year in FY27. Will further add a kicker to earning growth. I think we continue to remain invested in.
Can I ask your query?
Yes, sir. I am holding Techno Electric Engineering, 70 shares at the price.
Would recommend to continue to hold. I think the company continue to deliver on. I think should find momentum as the markets recover. Staying invested for next.
A lot of fundamental experts recommending banks as one of the picks to get the overall. To hold HDFC Bank or switch out to Bajaj Finance. What would your recommendation?
Has been underperforming the broader industry credit growth because of this merger overhang. But FY27 is the year where we will see an normalized at par growth as far as credit is concerned for HDFC Bank. If you want to switch, I would recommend you to switch to ICICI Bank, wherein relatively the growth can be on a higher side as compared to HDFC Bank. And even during this quarter, due to one-off, we have seen a kind of
Next query is from Kirthana from Bangalore, holding around 15,000 shares of Biocon at a price of 406. What is the short-term outlook here? Rajesh, any view, technical view on Biocon?
So technically, if we see since last few weeks, it's forming a base around 360 level, which also coincides with its 200 DMA. So hold on to it. Keep a stop loss below 360. Immediate resistance is around 388. Possibly once that is crossed, which we expect, after that we can expect a move towards 410 to 420.
Got the view, Rajesh. The next question is on a recent listing Meesho by Tejas Patel, and he's asking if it's a good time to buy this e-commerce counter. Sunny, I don't know if you have coverage on this one, but how do you see the space? Is it
commerce or quick commerce as a space continue to look good from a long-term perspective, and Meesho again a cash positive company, although one need to have a lot of patience over here. At the J curve is still way in terms of profitability. One of the a very well managed business as far as
be back in a jiffy.
Speaking, he's not around right now. How can I help?
It used to pester you, it used to know, or from a family business and wanting to build your own company. The reality is the challenges are there and they're much harder in different ways. With the advent of agentic AI, we built something interestingly where you can it'll pick up your phone for an unknown call. Would you like to answer?
You saw what happened with Anthropic and those tools which came out. How are you looking at these fast-paced developments? Because business can become...
It's going to be a societal crisis.
Running a family office or being involved in a family office is also work. I'm not saying it is. But there was this sort of comment and question. And
sitting in a family office is a more wealth preservation structure. Wealth creation or value creation structures is when you're actually building a company.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystem. Tech 360. Real talk.
Or it could dip further. So what should he do? Should he exit? Should he continue to hold? Should he average?
I think everyone is looking forward to India AI conclave, which is scheduled on 16th of Feb, wherein all the global AI CEOs of all the global AI companies and Indian IT companies will be participating. I am sure a lot of views will be coming over here how Indian companies are going to tackle AI and will embed AI to ensure the growth is likely to continue for all these large cap. Current juncture, anyway, valuations have turned pretty comfortable, trading closer to 17 to 18 times price to earnings multiple year forward basis. And at the same time, this is only a matter of a growth slowdown, not a matter of extinction. I think slowdown is definitely that can happen, and most of the companies are already pivoting their business model to ensure that growth is taken care of. So I think wait and watch for a week, and then probably we can take it.
Got that view, Sunny, and thanks for the detailed explanation, because it's a key counter, very topical, and we're getting a lot of queries on it also. So let's go across to our next one. This one's from Patiala, and Navneet has a stock query for us. Navneet, go ahead. What's your query?
Yeah, I'm a regular viewer. I really thank you guys for that.
Well, thanks so much, Navneet. Appreciate you joining in every day. Got it, Navneet. Now, we did discuss that in the first half of the show, but Sunny, what would you recommend Navneet to do?
Definitely, ultimately, within power sector, we believe the power finance companies are likely to do well going forward, and synergy benefits which can play out. Valuations on a merged entity basis are comfortable. I think risk reward is favorable. Only one need to have a slightly longer term investment horizon, wherein if you are willing to hold to the stock for next 2 years, then you can continue to.
Right. Ashwini from Chennai is holding around 1,600 shares of Bellrise at an average rate of 176.5. What is the short-term target here, Rajesh?
Yeah, I mean, overall, the chart structure is positive, continuously moving in a higher top, higher bottom structure. So hold on to it. Stock has a strong base around 175 levels, and in the near term, possibly the stock can extend towards 205 to 210 levels.
That view, Rajesh. The next question that's coming in is on Jaykumar Infra. It's bought at 650 rupees per share. Let's pull up that counter. And this one's from Naresh. Now, he is currently sitting on a loss. So, Rajesh, should he continue to hold, average down? What would you recommend?
So as of now, if we see since last few months, the stock is trading in a range of around 540 to 600. So as of now, hold on with a stop loss below 540. If that is broken, further sell-off would be seen. But on the high side, 600 is the key resistance. Once that is broken, we can expect some move towards 670 to 680 level. So as of now, the stock is trading in a range. Keep a stop loss of around 540 levels.
Okay. The next query is coming in. It's a live caller query, in fact, from Kerala. Ahmed, you can go ahead and ask your query.
I am holding 10 shares of HL for 4,300 rupees.
Okay. And can you hold this for long term?
Yeah, long term.
Okay. Sunny, any...
So stay remain invested in HL.
Got that view. The next question that's keep in mind. What would you recommend? Should he average down right now?
So if you see, it bounces in the range of around 600 to 625, selling is seen. So profits.
The next query is coming in from Vipul Shah.
Yeah, again, very similar to other IT services. I think there is a panic in the entire IT pack, and that has led to the correction across the board. Let the next week AI conference play out, and I'm sure most of them use AI or embed AI to ensure that growth is something which is likely to be done. Let us wait for some stability to return in terms of stock prices, and then probably we can think of averaging at a later stage.
Got the view, Sunny, but Wipro definitely been an underperformer compared to the other IT.
What's keeping you up at night? The uncertainties from outside are still where they were.
Can we see this deal through?
We're amongst the first.
Hi, this is Keshav Z.
Tell me a bit about Equal AI. Tell me a bit about your journey here.
Being a third generation entrepreneur, or from a family business and wanting to build your own company. The reality is the challenges are there. We built something interestingly where it'll pick up your phone for an unknown call, speaks on your behalf, then connects the call to you, saying this person is calling for this purpose.
Are you looking at these fast-paced developments? Because business can become redundant overnight right now.
People who are unable to adapt to AI will get impacted, and that's going to be a societal crisis.
Running a family office or being involved in a family office
Not much work, by the
conversation.
way, if you're just in the family office.
It's not much work. Okay, so I know it's out of the debate you're on.
Wealth creation or value creation structures is when you actually build.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems.
Tech has changed. So should your tech show.
Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews. Solid suggestions.
Sharma and I am your automate.
Wall Street. Nifty trades near 25,500. Sensex sheds more than total laggards. Most sectors barring one in the red. IT rout extends to worst since Lehman crisis amidst fears of AI challenge. Index sees a sharp 980-point recovery from the low of the day. Expansion and new business surge aid Indian hotels as Q3 profit jumps 50%. Revenue and EBITDA see double-digit growth. All other contenders like Hindalco, Biocon and PI sulk on the back of a slow quarter. HAL issues formal clarification saying it hasn't received any formal notification about the mega Rafale deal. DSC meanwhile clears procurement of the 114 jet Rafale deal, which is being hailed as the mother of all defense deals. Users on the Nifty 50. That has changed users on the Nifty 50. That has changed now to Hindalco, which is reacting to worries about the prospects for Novelis on account of that fire that took place. But pull up the IT index and see what the intraday move has been. And you will see that there's an over 1,000-point recovery. In fact, close to 1,200-point recovery from the low point of the day. And we are recovering from a 27% decline in the current cuts that you've seen for the IT index as a whole. It is now off that low point. And remember that the worst performance since actually 2022 is what you're seeing for the index as a whole. In fact, it's worse than what you saw during COVID-19 as well. We spoke with Moshe Khatri of Wedbush Securities earlier today to find out what he thinks about what is currently ongoing in the IT space. And we spoke to him, by the way, when the IT index was at the low point of the day. And he says that it was a little overdone. Listen in.
The new model in this Gen AI environment is going to be probably going to be more, it's less going to be driven by hourly kind of fees, and it's going to be more focused on objectives. You have to reach specific milestones to be able to get paid. And on top of that, you will see a decoupling from headcount growth to revenue growth. And you're seeing that for some of the companies that are changing those models and adjusting those models. So it doesn't happen in a day. This is a multi-year cycle. And we feel that what we're seeing right now, this doomsday scenario, is definitely overdone. It makes no sense whatsoever.
All right, overdone. It makes no sense whatsoever. I wonder what Nishchal Maheshwari has to say about that. He's joining us right now. Nishchal, thanks so much for taking the time. And as we speak right now, the Nifty IT is off the low point of the day to the extent of close to 1,200 points. And a few of those IT stocks are now seeing gains as opposed to sharp cuts. Do you agree with what Moshe Khatri was saying, that perhaps to a certain extent this has been overdone?
Afternoon, Alex, and to you and your viewers. I think jury is still out, basically, whether we have hit the bottom of the IT issue or not. But having said that, I think the market is driven by greed and fear. And at the moment, basically, what you're seeing is the fear. And when you have these kind of emotions, basically, market tends to overdo it. And I think that's what has happened today. But it doesn't mean that IT is out of the woods and this is the bottom of the sector. I still believe basically there are issues which all these companies have to address, and they have to come back with a growth plan, which at the moment I don't see most of them having it, and that's why I think the market is really worried, and that's why at all higher levels you will continue to see selling happening.
Now, the way that things, and you aptly described it, the market is about greed and fear is evident, at least it was earlier today, and seemingly some people are attempting to bottom fish. Those multiples have declined quite sharply in the recent past. So therefore, in that context, Nishchal, people are arguing that you should look at it in terms of PEG ratios, and you shouldn't have ratios of more than 2.5 to 3, which would pull down the effective multiples on the price to earnings front to about 12 to 13 or 15 at the most, which is significantly lower than what we're seeing right now as well, at 18 to 20 or thereabouts for several large IT companies. So from that lens, more downside is possible?
PEG of 2.5 times is really very aggressive number. I would actually, given that these are very, very hugely cash generating companies, I would actually put a DCF to them and try and see basically what kind of valuations are working. Now, what has happened is today there is a report out by one of the broking firms basically where they have cut down the terminal growth number. So typically most of the analysts do a 5% kind of a perpetual growth. I think that number has been cut down to 1 and 2%. And in that kind of scenario, I think their DCF will all come down. And that's why I think market is worried and wants to get out in a hurry. But I do agree with Moshe Khatri earlier, basically, that jury is still out. We do not know basically that how this whole thing is going to pan out. And one thing which is the silver lining here is basically that somebody has to convert all this, right? It has to become a use case. You can't use AI generally by any company. Somebody has to convert it into a usable thing. And I think that's where the Indian companies fit in. Now, till we get that visibility, basically, that what and how it's going to get driven, I think that's where the uncertainty is there in the market. And that will continue to impact the stock prices.
Yeah, well put. By the way, the IT index, even as we're speaking, is climbing. So somebody is listening to what you're saying, Nishchal. And it's now down just about 1% or thereabouts. So, but I do want to talk to you about Bajaj Finance. Allow me to play a certain clip from the recent conference call, because this relates to the use of artificial intelligence. In fact, they're using, I know that a lot of you will have listened to some of these calls and would have said that we don't like listening to the calls that Bajaj Finance sometimes sends out. And I must confess that I haven't got them in a while, which means that they're not out to sell me anything. But having said that, this is what Rajiv Jain has to say. He's speaking about how artificial intelligence is being leveraged to get these calls out, these customer calls out. And the lender's already run 20 million calls. It's ramping that up as well. So think about this from the perspective of productivity gains for this company. It's quite considerable. Listen in.
AI listened to 20 million calls and converted voice to text and gave us data.
text to data conversion happened for 5.2 lakh customers, and as a result of that, we generated 100,000 new offers on which we did not have information earlier. So that's the way, and how you're seeing it move. That the first capability did not exist in Q1 and Q2; it just got deployed. So we'll be able to listen to 100 million calls next year.
Okay. All right. So that's the word coming from the management of Bajaj Finance, which, by the way, is trading with gains of about 0.8% in a pretty woeful setup for the equity market. So stocks that are doing well today, you should take note of them. Nishal, comment on Bajaj Finance as you see it. And as you've said, jury's out. We'll have to see how applications are made. But seemingly, they're changing their model to having less of human interface with potential customers, and I wonder what the conversion there is. And I think that what they were saying with regard to the usage of the data is very critical, because as a lender, they're going to go through what they collect and they're going to decide whether there is credit worthiness. How do you read Bajaj Finance's moves in the recent past?
So I think Bajaj has been known for using technology, and I think they were the first guys in the street actually and I remember one presentation which Rajiv made, I think maybe several years back, basically, and most of the analysts came out and said that it's more of an IT company rather than actually a finance company. So they have been extremely smart in using the technology, and they are ahead of the whole market. And again, they have proven that they are ahead of the market. Now, the one point which I want to make is basically Bajaj is also utilized to create this use case. Right? They are now saying that they will listen to 100 million calls next year. Now, somebody has created this use case for them. And that's what I'm saying. Basically, these IT companies are supposed to be doing that part. Somebody is going to make this AI useful to the end customer. And that is the job of the Indian IT companies. They have the scale, they have the skill. So I'm very sure basically market will, these companies will find a way out, except for at the moment there is a huge amount of uncertainty and fear, and that's why you are seeing this kind of a scenario.
So I want to shift gears, Nishal. I want to talk about Hindalco, which is losing ground a little bit at this point. And some might argue on expected lines, because there is an impact of the fire that Novelis had to deal with. And there is a one-time hit. It has been estimated at 2,610 crore rupees. But there's also a concern about the increased leverage for Novelis and the rise in net debt to equity and the uncertainty about when this issue is going to be resolved. So the implications for cash flows worse than was previously penciled in. 5% lower or more right now. I've had one commentator, Nishal, talk about that 900 level, not from a technical perspective, but from a fundamental valuation perspective that makes it look attractive at that point. Do you agree? Do you concur? How do you look at the prospects for Hindalco?
So I do not cover Hindalco per se, basically, but what my worry remains to be, if I remember it right, I think this is the third or fourth accident which I think Novelis is having there. And that's my worry, basically, that what is really happening. Every 6 months you have an accident, either fire or something else. That's a sort of a worry for the industry. Otherwise, for Hindalco, but otherwise what I see here is basically that the metal rally has played out well. Hindalco has also played out well. I think at the moment it's a best avoid kind of a situation as far as metals is concerned.
Got it. All right. Nishal, quick question. And as you see the texture of the market right now, we're nearing the end of the third quarter results. What have you seen that is absolutely got you excited after this results season? Stock-wise.
I think
stock-wise, I'm not talking about a general question. Stock-wise, what stock earnings did you see or sector earnings did you see that made you excited?
So earnings may not have come out very different from what was the expectation, but I'm saying we as analysts actually look at more of what kind of commentary the managements have made, and that gets the market excited more, saying that yeah, the visibility and all, and if the credibility of the management is high, then obviously people tend to believe it. And I think one of the sectors basically which across the sector, most of the companies have made a good commentary and the order books are strong is the power sector basically.
I need to come back to you on that one. Nishal, apologies. It's we're running out of time because we have to go to the management of Lupin. So I will delve deeper into that at a later stage. But thank you so much for taking the time.
Thank you. Thank you. Welcome. Welcome.
All right, let's go across to the management of Lupin. Strong set of numbers. Let's find out what they're saying.
Starting with your US business, were high margin product launches the reason for margin expansion that you're seeing, and can this margin be sustained going forward?
Well, the products that we have, out there really have done very well, which is this tolvaptan that we launched at the beginning of this year. We have mirabegron, which is last year. We also have, in fact, products like Spiriva and albuterol, and a few of the products that we're launching the course of this year. So all of them have contributed tremendously to building up the overall, as you say, the quarterly run rate of close to about $350 million. Clearly, besides that, there has, of course, been a tremendous focus on costs as well. R&D overall spend in line with our expectations. So given all of that, there's no surprise to us that our ability to kind of sustain where they are.
Understood. So for US business, which has seen a very strong growth, of course, limited competition launches were the key drivers. What are the next, major limited competition launches that you would expect or that we can expect in FY27 to, maintain this momentum?
So as you would appreciate, we just settled with, in fact, mirabegron, with as for mirabegron, so we expect that to continue. Perhaps, tolvaptan, so of course, we expected competition this quarter itself. Fortunately for us, that did not materialize. So even if there is competition, we hope that we will continue to do well with tolvaptan. There could be products like liraglutide. There would be GCSF, the biosimilars being launched and the like. So the overall momentum in America would certainly continue. We continue to perform well across various other geographies, including India. There's, of course, the expected semaglutide launch out here. So given all of that, I would expect, in fact, the top-line buoyancy to certainly sustain momentum. And the overall focus on cost would certainly continue. So given that, I would expect margins to be pretty good.
Understood. And sir, what low this year, because the sales were up 5.6% year on year. What's the outlook there? Were you expecting much higher growth, or this was anticipated? And of course, what's the outlook? When can you see, that double-digit growth when it comes to your India business?
Actually, that figure is a bit of a misleading one, essentially because the domestic formulations have done pretty well. It's 10.9% really. Whilst the combined number is along with, in fact, the sporadic institutional business, the tender business really, the global institutional business, anti-TB. That's more a tender business which has its own volatility. So if that were to be knocked out, then the India region domestic formulations was 10.9%. We have done particularly well when it comes to cardiovascular as well as respiratory products. So we meet the margin, the industry leaders by quite a healthy margin, so to speak. We continue to do very well in those two therapies. So overall, I think we're pretty pleased with, in fact, the performance on the India front.
Understood. And sir, your in-licensed products, contributed 6% to the India sales, which is, I think, down 12% from FY25. Is this a decrease due to shift towards in-house innovative asset? I mean, what's the outlook there, and what's the target there?
Clearly, loss of exclusivity is what is expected, from when you have in-licensed products. So that clearly has impacted us in some ways over the last couple of years. And clearly, the overall salience of in-licensed product has come down from a high of 16-17% that it was a few years ago, and has been continuously going down. It's 5-6%, as you said. And in the next few quarters, you could expect it to come even lower. Clearly, that's because of the fact that they would be losing patency And potentially because of that, the good thing about it is that you would actually see a volume expansion coming in, albeit it comes at a drop in terms of price.
Understood. And sir, which complex platforms, I mean, maybe inhalation or injectables or opthal, can sustain this, the margin trajectory that you have seen? So just wanted to understand out of these three, which is the primary growth driver?
This margin expansion that you're speaking about is essentially because of performance across various geographies. We continue to do well in America, and given the top line buoyancy that we expect to kind of sustain well above the $1 billion mark even next year, the margins contribution from there would certainly be pretty good. And given the fact that all other geographies will also continue to do well with, in fact, a pipeline being ready for every market, including India. India, there is in fact a renewed focus when it comes to, in fact, getting products from our own stable. The case in point is our triple combination, LAMA ICDS combination on the respiratory front and the like and so on. So we believe that we are upping the ante when it comes to India and other markets. So there are products lined up for markets like Brazil. Now we've already put in dapagliflozin, which has done extremely well out there. When it comes to markets like Europe, Namuscla, when it comes to Lopobeg, all of this have continued to do pretty well. And that would contribute to the buoyancy and, of course, contribute to the bottom line as well.
All right, so strong set of numbers. Stock price is down, but the market breadth is pretty bleak at this moment. Even in that context, there are still a few stocks that are doing well. A couple of these, by the way, in the shrimp feed space, they were at upper circuit yesterday. They're gaining again today. You have Apex Frozen as well as Avanti Feeds, both doing particularly well. Avanti Feeds at 3.5% higher, having recovered from the low point of the day. But Apex Frozen, as much as 8.9% higher. This is something that you should keep on your radar, by the way. But beyond this, you also have Bharat Forge, which is trading with gains of about 1.7% or thereabouts, or under 2%, 1.6% at this point. And this is building on gains from yesterday when the management spoke after the third quarter numbers. And Mr. Amit Kalyani was actually quite positive about quite a few of the allied businesses that have been built into. That's looking positive heading forward as well. Let's bring in Jasmeet to find out what brokerages have to say about this, because there are two upgrades that have come through. Jasmeet?
Well, Alex, thank you for that. As rightly said, we see a continued gain coming in for Bharat Forge after the Q3 numbers and the management commentary. And today we also have two brokerages who have given a massive upgrade to this particular counter. Something like Morgan Stanley and Jefferies are the two counters that have upgraded this particular stock. Morgan Stanley upgrades it to overweight from equi-weight, and they hike the target price to 1978 from earlier 1340. While on the other hand, Jefferies also upgraded to buy from earlier underperform and hike the target price to 2150 from earlier 1300. Now, what Morgan Stanley sees in this particular counter is they see the bottoming of the overall truck cycle in US and EU, and they also see a good momentum coming in for India geography as well. While they make a big bet on defense, they expect the defense to grow by 40% and the revenue to grow by 20% in the coming time. Further, they also make a note that segments like defense sharply expand the overall addressable market for the company going forward, and that's why the target hike comes for this particular counter. For something like a Jefferies, they see improving earning trajectory for this particular counter, and they also see the operational outlook is improving when it comes to the US truck cycle as well. While they make a note that they upgrade the FY 27 and 28 EPS between 4 to 18%, and the overall compounded growth what they give for this counter is huge. So earlier they gave a 12% compounded growth for 24 to 26, and post that they have increased the compounded growth rate from 12% to 33% between FY 26 to 28. So we see all of this thing is impacting the stock, and the stock is in green even today, up about 1.5% in trade.
Absolutely. Thanks so much for that, Jasmeet. Now, a few stocks that you should keep on your radar, and this is one of the worst performers as we speak right now, Muthoot Finance. The thing about it is that the numbers weren't terrible, actually. They came in at quite a sharp increase, and I'm talking about the PAT number rising by as much as 95% on a year-on-year basis. There was as much as a 12% increase sequentially in the gold loan assets in terms of assets under management. But the issue really is on account of a couple of brokerage notes that have come through, and also the fact that the valuations were getting, some might argue, a little stretched. Morgan Stanley has downgraded the counter to equal weight from overweight and cut their target price to 4,500 from 4,835. They say that the strong headline numbers, but the upside is limited at this point. They are nudging up the earnings estimates and price targets, but they also see that valuations appear insufficiently attractive at this point, which is really the crux of the matter. They see limited scope for further upsides or upgrades in FY27 and 28. That's the next financial year and the one after that. Now, on the flip side, on the other end of the spectrum, you have Engineers India, which can be argued to have had a turnaround quarter. It's a beat on all fronts. You have revenue growth that was aided by turnkey and consultancy business. You have gross margins that contracted on account of lower order execution, but there is an element of consultation that has come through. That's one of their business lines, and every time you have a higher consultation business, the margins, the EBITDA margins, I'm not talking about gross margins, the EBITDA margins actually go up quite dramatically. The order book is actually standing at 12,540 crore rupees. Revenue increase of close to 60%, EBITDA rising, catch your breath, 260% or thereabouts, and margins up by 1,630 basis points to 29.1%. That's quite the uptick that you're seeing compared with 12.8%, and the net profit coming in at 347 crore rupees. Finally, Honasa Consumer, keep this on your radar too, because the revenue increase has come through. It's coming at 16% or thereabouts. The margins are up as well by as much as 590 basis points, 10.9%. And the net profit has come through at 93% higher, coming in at 50.2 crore rupees. There are a couple of notes that have come through on Honasa Consumer as well, which are positive. The rise of beauty is what one of them has described it as. But that brings us to the end of this edition of Markets at 12. It's been an absolute pleasure bringing it to you. We've got lots lined up, starting with the next one. Do stay tuned. There's lots more coming up over the course of the day.
Hi, this is Keshav's equal speaking. He's not around right now. How can I help?
It used to pester you, it used to irritate you, it used to be something that you didn't want. This is a massive pain point in India, by the way. Phone spam.
Tell me a bit about Equal AI. Tell me a bit about your journey here.
Being a third generation entrepreneur or from a family business and wanting to build your own company, the reality is the challenges are there and they're much harder in different ways. With the advent of agentic AI, we built something interestingly where you can it'll pick up your phone for an unknown call, speaks on your behalf, then connects the call to you, saying this person is calling for this purpose. Would you like to answer?
You saw what happened with Anthropic and those tools which came out. How are you looking at these fast-paced developments? Because business can become redundant overnight right now.
People who are unable to adapt to AI will get impacted, and that's going to be a societal crisis.
Running a family office or being involved in a family office is also work. I'm not saying it is. But there was this sort of comment and question and conversation.
Not much work, by the way, if you're just in the family office.
It's not much work. Okay, so I know it's out of the debate you're on.
Sitting in a family office is a more wealth preservation structure. Wealth creation or value creation structures is when you're actually building a company.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show. Just
Hello and welcome back to NDTV Profit. You're watching Trending Stocks, a show that puts the focus on the key stocks that are trending in trade today. Also gets you the fundamental as well as the technical perspective on quite a bit of them. But over the next half an hour or so, we'll try and do that. But before we do all of that, Sharad, tossing to you for the market share, because amongst other key stocks, the IT ones are seeing quite a bit of recovery. What are you picking up?
Well, that's right. Thank you very much, Puneet, for that. And largely we see there was a big gap down impact coming from the IT space. But over the last 10-15 minutes, Puneet, the recovery has started. It's not very big, but definitely short covering is coming in the IT stocks. The larger players are of course not supporting, be it Reliance, HDFC Bank and ICICI Bank, and that is why that much recovery is not coming in. If Nifty IT index, if you can show, that is where you will see the actual magic actually happening, and this is the magic which I'm talking about. It's almost there in that green area. It's going to take another 10-15 minutes if it sustains in this rate, and that is where the street is very, very optimistic about. A lot of overselling was there, and now the technical pullbacks is something which is being looked at. Also, Nifty Bank, the story remains the same. Not much happening here. It's also near its day's low. A little bit of recovery attempt is trying to come, but nothing very much convincing. Let's give it a little bit more time, but let's look at the triggers. What's more important? AI-led sell-off has dampened the market sentiment. Overall, a recovery is still at play, but still not that convincing. Second straight day this is happening globally, and Nifty has broken the 25,600 key level mark. So if that bounces off in the closing, that will be a key support level for Nifty. Nifty Bank, the congestion level is at 60,000. It's comfortably above that. If it goes below that, then there is a concern. Also, apart from that, let's look at the key data. The options data is suggesting a recovery may be there because the PCR numbers are on the lower side. But the short covering, that's the biggest news right now, Puneet, is the oversold IT positions. The short covering is coming in. And that is where the overall momentum is looking strong. But broader indices, not much recovery because still it's in the favor of bears overall. If you look at it, the ratio is almost 3:2. Realty, metal, energy, they are not holding up, and big sell-off is still there. So, Puneet, it's just a recovery of IT, but the markets haven't actually recovered. Some sectors are still under the pain. What are you getting there?
Well, definitely a lot of stocks that feature on the watch list today. The first one I have to point out is Biocon. Now, of course, the IT play has been one of the key ones, and we'll get to that in just a bit. But Bajaj Finance is the first one in the watch list that we're picking up. Largely, we've seen a positive commentary come in on AI. Now, we'll play out a bite from that conference call, also give you that perspective of what the management said, because it's some optimistic commentary coming in on that. Lupin, we put it in the green, while stocks in red, led by the larger correction that we're seeing in the broader markets. Strong US business performance is one of the key positive triggers about this particular stock. ONGC, the Brent crude prices have fallen by 2.5%, having a reaction there. Muthoot Finance though, now actually the stock should be in the red because it's been almost down 11% in the trading session. So while there were some key aspects to the results, largely a down and out quarter for Muthoot Finance in this particular quarter. Hindalco is the other one where we've seen the Novelis plant fire actually impact the Q3 with a one-time loss. So Hindalco is in the red in that aspect. Engineers India is the other counter that we continue to focus on. Revenue up 58% in this particular quarter. The IT stocks, largely the AI, and we've put that in the green because of the recovery that we've seen in today's trading session. 1,300 points now. It's a massive, in just 3 hours, nonetheless, and shows you the strength of what people are estimating in terms of value buying those key stocks at 17, 18 times price to earnings for the likes of TCS, Infosys, amongst others, and that's clearly visible there. For Eternal, there has been news flow that Flipkart might be entering the food delivery space. We spoke about that yesterday. Profit booking is continuing on this particular counter. PI Industries, also the other counter where the degrowth was quite stark in the agrochemical business. Overall, profit was down 36% in this particular quarter. Praj Industries, though, the stock can't catch a break in that sense. Margins again. Yet another quarter where it contracted by 250 basis points, while volume pressure is visible on NMDC as well. But Sharad, what are some of the key stocks that you're picking in the watch list today?
Well, thanks a lot for that. But now we'll move on to the rapid fire segment. And joining us is Akshay Bhagwat. Good afternoon, Akshay. Good recovery coming in the IT stocks as well. But we'll first start our rapid fire. And we need your buy, sell or hold calls coming in. The first one is definitely going to be Bajaj Finance. Last 2 days, a good technical strength is coming. AI commentary is something which the street is liking. Your views on that?
Good afternoon, Sharad. So buy view on Bajaj Finance for possible targets till 1040.
All right, the next stock is Eternal. Last 2 trading sessions, there has been a selling pressure coming in. Your view on that?
Eternal, again, although there is selling pressure, I believe 280 is a good support, expecting bounce back from 280 levels.
And PI Industries, a very weak set of numbers coming in. A big sell-off also in this counter as compared to its peers in Q3. Your views on that?
3000 is a good strong support. I'm expecting a recovery in short term till 3500.
And what do the technical charts suggest for Lupin? Numbers were good, but the reaction is different.
Lupin, again, on the verge of breakout about 2250. If the breakout matures, be ready for targets of 2350.
Well, Muthoot Finance, your views on that? The numbers were strong, valuations, all the biggest question mark here.
Slightly negative, sharp sell-off, 3400 can be the downside target.
All right, these are the important stocks in the rapid fire segment. Thanks a lot, Akshay, for your views. Over to you, Puneet.
Well, thanks so much for that, Sharad. But let's pull up Biocon as a counter. Now, they reported third quarter earnings yesterday. Largely a number that's in line with the estimates, but the biosimilar margins, led the improvement, helping offset a rather softer revenue trajectory. Now, my colleague Varsha actually spoke to Shreyas Tambe. He is the CEO and the managing director of Biocon Biologics about the quarter gone by, as well as what is the outlook that's actually expected for the company. Listen into what he had to say.
Talking about the Biocon Biologics, the revenue growth was slower over here at almost 9%. Can Q4 see a higher growth, when it comes to biologics segment?
Yeah, first up, Varsha, thank you for having me on your show, and thank you for the overall commentary in terms of how the business has been. I just want to kind of set the tone in terms of where the revenues have been. And I think I just want to categorize it as it has still grown, and revenues continue to grow very robustly for the last 8 quarters. So it's sequentially grown. We've seen a change in trajectory in the current quarter. but growth remains strong. Year on year, we've seen very strong growth almost every quarter. We've seen an even stronger growth in EBITDA, as you rightly pointed out, and we've been very clear even on the earnings call this morning that we prepared during the quarter for a series of launches for fiscal 27. We've got several approvals during the course of the last few quarters, and with 5 new products being launched globally, one of the things we are preparing ourselves for is an upgrade to the facilities for this large scale up that we expect to happen. That meant that the revenues will be moderated a little bit for this quarter with a very strong demand that we see. We were able to get very strong profitable growth for the quarter. So this particular quarter saw 700 crores of EBITDA contribution from a 2,500 crore revenue line, which is a 28% EBITDA margin percentage, which is very, very strong, given that we continue to invest 7% in R&D. So I wouldn't categorize this as a decline in growth trajectory. We continue on a strong trajectory, and you'll see that momentum as we go forward as well.
Right. No, Mr. Tambe, my point was because we've seen, Biocon Biologics growing at like 25%. And hence, my question was like this quarter we have seen a growth of around 9%. Can we get back to that 20 to 25% of growth?
Yeah, I mean, every year-on-year quarter, with that kind of uptake would be brilliant to have. But I would, look back and looking back at how we've grown, I believe we would see a very consistent growth pattern. The last 4 quarters, we've seen a nice growth trend evolving. And if you take that, wide window of 4 quarters rather than pick a particular quarter, some may be higher, some may be lower, you would see a very consistent pattern of double-digit growth year on year. And you would see a very strong margin growth as well alongside the revenue growth. And we expect that pattern to continue. With new products being launched, we expect it, from a future standpoint to be far more exciting than what the past has been.
Right. And Mr. Tambe, as you highlighted, the highlight of this quarter was, of course, the margins when it comes to Biocon Biologics. What were the levers of margin? Was it, high margin products that led to this kind of growth in margin, or you saw an, operating leverage also? And will these margins be maintained? What's the trajectory looking like?
That's a great question, Varsha. And as business grows and it ramps up and you're continuing to see that, the operating leverage has started to show. And we talked about it last quarter when we were here as well, where you're seeing that recede consistently from what it was a year and a half ago or 2 years ago to what it was even as late as last quarter and what it is now. So you will see the operating leverage plane as the business ramps up. On a full year basis, you will see that has started to recede. The second big point that I would want to make, apart from the operating leverage, is that the new products will also contribute to a better margin profile than what you've seen. So you will continue to see a slightly better margin, which will offset for some of the legacy products which might see an erosion. So you will see that on a consistent basis, and you will see it hold strong as we go forward, which is a very encouraging sign when you grow a business of this kind.
Right. And sir, with the launch of Glargine with Civica, what volume targets have been set for US market?
See, the Civica relationship that we've entered, it's a large partnership. It was something that we worked with the government of California. So the Californian government they addressed and recognized the problem that insulin was getting expensive. And they wanted to secure supply of insulins for Californians. And they actually worked with a not-for-profit organization, which is Civica, to see if we could source insulin and either make it there within the United States or get it from an approved, reliable source, which happened to be Biocon. And there is a 10-year relationship that Civica has, an exclusive relationship for that contract with the government of California. And we are, at this point, Civica's exclusive supplier. So very, very strong relationship, growing. California usually contributes to about 20% of the demand that it is created, that the US creates for most of the products.
Well, that was the management of Biocon Biologics, but let me also welcome Gaurang Shah, Senior Vice President at Georgette Investments at this point of time in the show. Gaurang, very good afternoon. Good to speak to you again. Just a quick view on Biocon. How did you view the quarter 3 results? Do you have it in your coverage and your view on the stock?
Well, thank you so much for having me on the show, Puneet. Good afternoon to all your viewers and to you and your entire team. A small disclosure. All recommendations are a part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So we've been a flip-flop kind of an approach for Biocon, honestly, Puneet, because even during the COVID time, there were 2 stocks which were laggard, if I recollect right, when the entire pharma sector was up and buzzing. And those 2 stocks, one of them was Biocon, the other one was Lupin. Then, of course, a lot of investment into R&D, new product launches got delayed, etc., etc. And as the verbatim given by the management to your colleague Varsha, we have currently a positive coverage on Biocon. But let me say this, the life beyond 400 plus levels for Biocon seems to be a little bit difficult, because every time it goes towards 400 and beyond, profit booking comes in and it comes down. Also, the numbers, I think they were supportive, nothing great for a radical upgrade in terms of target prices. If you have your investment, you can continue to hold. But I think consistency in delivery of third quarter numbers is something we'll have to watch out for.
That's the view coming in from Gaurang on Biocon. But the biggest story of the day is the recovery in the IT stocks, and importantly, it's off the lows. Nifty IT index is nearing the green levels, as well. We had pointed out earlier as well. But to give us entire picture about it, why this up move is happening from the day's low, too much oversold positions, is there a technical move, all the clarity, and the sector keeping busy is Jasmeet. Jasmeet, this sector has kept you busy for the whole week. What are the recovery reasons?
Well, sure, thank you for that. We see the biggest recovery in IT coming in last 10 days. 10 days ago, we had the Anthropic AI where the Nifty IT fell almost 6%, the biggest fall in last 6 years. But today, it has recovered almost 4% from day's lows. While Nifty IT has recovered almost 1,300 points, and persistent system is something that's leading the overall gain. While the reason why the overall gain in Nifty IT can be the valuations, given the valuations seems attractive at this point in time. After the fall of almost 10% in last 2 days, the Nifty IT seems a little plausible angle at this point in time. Further, we have also seen JP Morgan's note today morning, which have maintained overweight on the IT stocks like TCS and Persistent, showing an overall positive momentum in IT. But again, the margin overhang remains on IT as of now, to wait and watch how does the overall AI pivot takes place in the IT.
All right, thanks a lot for that. But there is an important update, of course, coming in as Moshe Khatri. We spoke about it in IMO today as well on the Gen AI front. And yes, it might be that the overselling is a lot unwarranted. Listen in to what his views are.
The new model in this Gen AI environment is going to be probably going to be more, it's less going to be driven by hourly kind of fees, and it's going to be more focused on objectives. You have to reach specific milestones to be able to get paid. And on top of that, you will see a decoupling from headcount growth to revenue growth. And you're seeing that for some of the companies that are changing those models and adjusting those models. So it doesn't happen in a day. This is a multi-year cycle. And we feel that what we're seeing right now, this doomsday scenario, is definitely overdone. It makes no sense whatsoever.
All right, that's the view coming in from Moshe as well. But good afternoon, Gaurang. I want to get you on this. The IT space, now as a recovery is happening, and of course its clarity hasn't come yet. What's the AI impact going to be, or what the companies are going to do about it? your views on this IT space, and in case if you have some bullish bets or you're still holding on to some calls, what are they?
So Sharad, I definitely agree with Moshe Khatri that this is an unnecessary overdone reaction. We always try to ape what the US tech companies do when it comes to our own tech companies. And let me say this, and I hope I'm right on this, Sharad, that this was not the first time that a AI tool called Anthropic was launched in America and it created this kind of a rippling effect. Earlier also we've had those kind of tools. Maybe going into future, in fact, Sharad, let me say this, there will be more such tools which may cause a lot of disruption in the short to medium term. But Indian IT companies is nowhere close to what Chinese and American IT companies are. We've been positive on IT for a long time. Our stance is that we need to have at least 1.5, 2 year plus kind of time horizon, given the kind of headwinds in the immediate short to medium term that IT sector might have to face. But we remain positive on small cap, mid cap, large cap. Some of the names, Science Limited, KPIT Tech. In the mid cap universe, we are positive on Coforge, LTI, Mindtree, L&T Technologies. In the large cap, HCL Tech, Tech Mahindra, Infosys, TCS. But having said that, let me also say, look, valuations may look attractive given the kind of correction that we've seen. Earnings are a little bit better. Even in the second and the third quarter post the earnings, Sharad, most of the management sounded quite optimistic about future growth, investment into AI related platforms, data centers, getting headcounts, etc., etc. Everything was positive. So there is short to medium term issues are there, but we don't think you should write off IT altogether.
You, Gaurang, and definitely the valuations are keeping everybody busy at this point of time. Concerns around if it could go to, given the low growth and the dividend and the earnings yield that the companies provide, could it go back to that 15 times earnings and we've never seen those levels, went back to 11 times in 2008. That's also led by the financial crisis. Will be something to watch, at least for today. A stellar 1200 point recovery on this counter. But let's also pull up Bajaj Finance as well, because the company actually held a conference call and it's putting AI actually at the heart of its growth leap. Now, let's zoom in a little bit on the commentary coming in from Rajiv Jain, the company's vice chairman, on what he had to say, because the lender already has run 20 million customer calls through its AI and gearing up to turbocharge that to 100 million is what he said. But listen into what exactly he had to say.
AI listened to 20 million calls and converted voice to text and gave us data. Text to data conversion happened for 5.2 lakh customers, and as a result of that, we generated 100,000 new offers on which we did not have information earlier. So that's the way, and how you're seeing it move. That the first capability did not exist in Q1 and Q2; it just got deployed. So we'll be able to listen to 100 million calls next year.
Gaurang, coming back to you, because we've seen that all companies are now using some form of AI and are very, very happy to talk about it. Now, in case of Bajaj Finance, because we've also seen IPOs like Lenskart, they are a consumer tech company, is what they always branded themselves as. How do you view the space in terms of specifically for Bajaj Finance also, and what's your view on the counter?
So again, as a disclosure, Puneet, Bajaj Finance was a stellar performer even when the markets were down and out, right? It touched a new all-time high, and I think it is somewhere close to about that after the adjustment of whatever corporate development, split bonus, etc. We've been maintaining a positive stand on Bajaj Finance. So I think, look, Puneet, every sector will try to minimize overhead cost in terms of labor to maximize the profit margin. And as and when there is need and necessary to use such tools related to AI, which enhances their business and gives them a deeper penetration, all those sectors will try to use that undoubtedly. It remains to be seen how successful these are. But nevertheless, I think companies are interested and are investing in this. It's a positive sign. As far as Bajaj Finance and the entire BFSI segment is concerned, we remain extremely positive. We had a rate cut last year, 1.25%. This year, I think post-April, you will see rate cuts coming through in case if the data points are supportive. Loan growth or credit growth is likely to grow exponentially, Puneet. That's what our estimates are. And that will enable better quarter-on-quarter numbers and bring down the gross and net NP and get in bring down the provisioning as well. So overall, very constructive on Bajaj Finance and overall BFSI segment.
So constructive view coming in for the BFSI sector and Bajaj Finance. Thanks a lot, Gaurang, for giving your views on these stocks as well. But one more BFSI stock is there I'd like to talk about is Muthoot Finance. Q3 numbers were strong, but the stock is down in trade. Selling is happening in. But to give you more clarity, we had a chat with the management and we had a chat with George Muthoot, the MD of the company. Listen in to what he had to say.
The quarter four also is looking quite good. The gold price is even now, even at $5,000, etc. It is very well, still very elevated. If you look, the last 1 year, the price has gone up by 80%. So probably there is a lot of headroom there. Again, as I said earlier, this is not the gold price which is creating the demand. It is the demand for funding or the need for funding which is creating the demand.
Hi, this is Keshav Zikol speaking. He's not around right now. How can I help? It used to pester you, it used to irritate you, it used to be something that you didn't want. This is a massive pain point in India, by the way. Phone spam.
Tell me a bit about Equal AI. Tell me a bit about your journey here.
Being a third generation entrepreneur or from a family business and wanting to build your own company, the reality is the challenges are there and they're much harder in different ways. With the advent of agentic AI, we built something interestingly where it'll pick up your phone for an unknown call, speaks on your behalf, then connects the call to you, saying this person is calling for this purpose. Would you like to answer?
You saw what happened with Anthropic and those tools which came out. How are you looking at these fast-paced developments? Because business can become redundant overnight right now.
People who are unable to adapt to AI will get impacted, and that's going to be a societal crisis.
Running a family office or being involved in a family office is also work. I'm not saying it is, but there was this sort of comment and question and conversation.
Not much work, by the way, if you're just in the family office.
It's not much work. Okay, so I know it's out of the debate you're on.
Sitting in a family office is a more wealth preservation structure. Wealth creation or value creation structures is when you're actually building a company.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a
Profit for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business. An expansion and new business surge aid Indian hotels stock trading with losses at this point in time, but you do have the Q3 profit that has jumped about 50% revenue, and EBITDA see double-digit growth as well. All other contenders, the likes of Hindalco, Biocon and PI, sulk on the back of slow quarter numbers. And HAL issues formal clarification saying that it hasn't received any formal notification about the mega Rafale deal. DSE clears procurement of the 114 jet Rafale deal, being hailed as the mother of all defense deals. And Bajaj Finance is putting AI at the heart of its next growth leap. Vice Chairman says the lender has already run 20 million customer calls through AI, and now it's gearing up to turbocharge that to 100 million across functions. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well, on the top buzzers at this hour, all while you grab lunch. First things first, let's take a look at what the markets are up to right now, because when you talk about Nifty, in fact, that is trading with losses of about 200 odd points thereabout. Sensex trading with cuts of about 800 points as well. Let's take a look at the sectoral picture, and that is very sharply tilted in the favor of reds. You're looking at metals that are losing some shine there with that 2.5% cut coming in. Realty, IT also under pressure. It has those still recovered from those intraday losses. About a 900 odd point recovery coming in for the IT index from the day's lows as well. When you talk about some of the other sectors, energy, oil and gas, and even FMCG are also on the back foot. It's just India, it's just media, in fact, that is trading with a slight bit of a gain there. But let's also talk to you about some of the top gainers from within the broader universe as well. You do have Engineers India trading with that uptick of about 14.4% on the back of decent numbers. There's a Vadman Textiles that's doing well, KPR Mill, Hexaware, some of the stocks that are doing well as well. But when you talk about from within the Nifty 50 pack as well, you're looking at Eicher Motors in the fast lane yet again. Bajaj Finance on the front foot with that 1.1% uptick. Now, mind you that they're betting on AI in quite a good way, and that's something that they've highlighted in the con call commentary as well. Other than that, on the flip side, there's a Hindalco that's trading with a cut of about 5%, HUL, ONGC, TCS, Infosys, Wipro, all of these counters are trading with cuts of anywhere between about 1% to about 4% thereabout. And when you talk about Muthoot Finance, that one is trading with a cut of about 11.5 odd percent thereabout, on the back of not just the numbers, but actually the brokerage commentary that is quite bearish when it comes to this particular counter. There's actually a Birla Soft, there's a Hindalco that is under pressure as well. So bunch of those counters that you're looking at, and of course Hinzinc back in the red with that 4.5% loss coming in on the back of silver prices also falling to the tune of about 10%. Now since then, of course, you do have silver that has managed to eke out quite a bit of gain. So 2% plus uptick is what you're seeing coming in as far as silver prices right now are concerned. With that said, let's also take a very quick look at gold as well. That's risen more than 1.5%. You're keeping an eye on US inflation data for some more cues in terms of the Fed's next move as well. And that's something that we'll be exploring in terms of what is in store when it comes to precious metals and oil as well. And we do have Kunal Shah, Head Commodity Research at Nirmal Bang Securities, joining us this afternoon. Mr. Shah, thank you so much for taking time out and joining us this afternoon. It is yet another interesting week that we've actually wrapped up initially, we did have some of those gains come in. Yesterday, of course, you did have silver especially gave up most of the gains on a weekly basis. What are you looking at, one, for the next week, and how do you make sense of what has happened, what has transpired in this entire week gone by?
I think the major reason for the fall in prices of gold and silver yesterday was Russia stating that if there is a peaceful resolution between them and US, then they may adopt the dollar-based payments, which they are right now doing in yuan or Indian rupee or in rubles. So I think that triggered a massive sell-off in the precious metal vertical in commodities. So right now, so far, the theme was that the BRICS are on the verge of coming up with their own alternative payment system, and they are going to overlook through the US dollar SWIFT-based monetary system. So now again they are coming back to the dollar, so the dollar should strengthen, and then gold and silver corrected post that. So I think it's going to take a lot of time, even if that does. So I think that's not the reason why gold and silver should have gone down. The fact remains is that every rise we see in both of these precious metals, there is likely to be a selling pressure which is going to mount. Because the kind of run-up we've seen in last 1.5 years, most of the positive news are already discounted. Whether there is a rate cut or whether there is no rate cut, whether today's CPI increases or doesn't increase, the fact remains is that precious metal, there is definitely a froth building in. Everyone wants to buy precious metals at levels which are all-time high after rising by more than 250% in a matter of a year. Okay, and gold also rising by 70% in a matter of a year. And then everyone still wants to buy it. That itself shows that there is a more of a FOMO buying rather than the value-based buying right now. And I believe that they are not likely to perform in near future, and the possibility of they are likely to go down is very high. So on every rise, we expect the selling to accelerate in both these metals, and we are not bullish in a shorter term in neither on gold, nor on silver.
Right. Right, no, absolutely, and Mr. Shah, just not just about the rise, right? Because, as the famous idiom goes, that where there's a will, there's a way. It seems like when it comes to precious metals, where there's a dip, there's actually a way for them to, get back up. Do you think it's actually just bargain hunting that you're looking at right now, or some of that FOMO buying that is making its way to the precious metals complex? Or do you think that the fundamentals, not just in the near term, but just in general, the fundamentals are quite strong, and that's why you're seeing some of this bargain hunting, some of this buying also come back to precious metals every time that, you see a dip?
So it's a push and pull scenario for precious metal, where the fundamentals are clearly indicating that there's going to be more and more central bank which are continue to buy gold going forward, even in the year 2026. So the fundamentals are not bearish, at least for gold. But for silver, the way it has risen and the way it has collapsed, we believe that the demand destruction has taken place at a higher levels. So silver, we are not very bullish. Gold, if it goes down, yes, there is a lot of value in gold right now in the current environment where we are living, where we are at the cusp of major geopolitical tension building in, where we are at the cusp of central bank diversifying away from the US dollar. So in that kind of scenario, gold will continue to do well. So I would say the narrative which you said can be applied on gold, but not on silver at this juncture.
No, absolutely, and it is a very complex story when you're looking at prices also. They should tell you the same story when it comes to silver as well. But, Mr. Shah, I wanted to try and understand, it's a very clear bull versus bear situation that you're seeing emerge when it comes to the entire precious metal complex, even more so when you talk about gold as well. But, going forward, let's say somebody has already invested, be that through the physical commodity itself or through ETFs, what are you advising for them? What should they be doing? Should they be taking some chips off the table? Or how should they be looking at the market right now?
I think silver, whenever you see a spike, around $90 and so, I think if you are long, you should take some profits out of your position. There's no point in increasing your allocation towards silver at these levels. I would not recommend to do that. And as far as gold is concerned, Even in gold, I'm not very bullish. Like I'm not having a target of $6,500 or $7,000. So even if gold revisits $5,500, it's going to be a big thing. It's a 10% move, and I think one should not expect more than that. So my near-term outlook is not bullish on both of them, and slightly longer term, if gold goes down more, there will be value, and one can initiate long position in it.
Thank you so much, Mr. Shah, for taking time out and joining us on the show. So that's the entire update coming in, when you talk about the entire precious metal space as well. But tell you what, let's take a very quick break on that note. More news and updates on the other side.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were. Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes.
Hi, this is Keshav Zikol speaking. He's not around right now. How can I help? It used to pester you, it used to irritate you, it used to be something that you didn't want. This is a massive pain point in India, by the way. Phone spam.
Tell me a bit about Equal AI. Tell me a bit about your journey here.
Being a third generation entrepreneur or from a family business and wanting to build your own company, the reality is the challenges are there and they're much harder in different ways. With the advent of agentic AI, we built something interestingly where you can it'll pick up your phone for an unknown call, speaks on your behalf, then connects the call to you, saying this person is calling for this purpose. Would you like to answer?
You saw what happened with Anthropic and those tools which came out. How are you looking at these fast-paced developments? Because business can become redundant overnight right now.
People who are unable to adapt to AI will get impacted, and that's going to be a societal crisis.
Running a family office or being involved in a family office is also work. I'm not saying it is, but there was this sort of comment and question and conversation.
Not much work, by the way, if you're just in the family office.
It's not much work. Okay, so I know it's out of the debate you're on.
Sitting in a family office is a more wealth preservation structure. Wealth creation or value creation structures is when you're actually building a company.
Presenting the all-knowing, all-powerful
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at some of these counters that are buzzing away in trade. So you're looking at an Engineers India with an uptick of about 14.5% after a solid set of numbers. And when you talk about Honasa Consumer as well, they've actually doubled their profit, and even that stock is doing quite well for itself right now. When you talk about Inox India, that's also one counter that's holding up quite well with that 3.5% up, in fact, close to a 4% uptick coming in on the back of a strong set of numbers in the third quarter. You're looking at record revenue and a sharp improvement in margins as well. In fact, let me take it across to Jasmeet to try and get a sense of the numbers and also take it across to the management.
Well, thank you for that. If you look at Inox India, they post a strong Q3 with a record revenue and a sharp improvement in the margins. While if you look at the export side of the business, the export hit an all-time high, and the industrial gases segment also led the overall growth in terms of the revenue performance. While moving on and understanding the other key aspects, the international revenue also saw traction for the management, while the order inflow remains healthy for the company. If you look at the other key aspects and the performance of in terms of operational highlights, we said the cryogenic engineering business has done really well for the company and has started to pick up globally as well. To break the numbers down and to understand what's the road ahead for this particular company, we are joined by Mr. Siddharth Jain, the promoter and director at Inox India. Well, welcome, Mr. Jain. Let me quickly start off by helping you understand the overall margin expansion and try to understand what led for the margin expansion this particular quarter gone by.
Well, it's been a stellar quarter for us. As you've seen the numbers, we've had approximately 30% growth year on year across our top line, EBITDA and PAT. Sequentially as well, we've had about an 18% growth quarter on quarter. And primarily, this has been in line with our long-term plan that we've been executing for the past 2 to 3 years with our capacity expansion, our market expansion, the benefits we got by going public. You've seen a constant increase in our export market share. The rupee is certainly helping us. There are certain headwinds with the tariffs, but I think most of them are being overcome with the operational efficiencies that we've been developing over a period of time, especially with our new capex investment that we made. So I think our strategy is finally playing out, and I think we've developed a very strong base across our 4 product lines, which is end market, which is in industrial gases, LNG, cryo-scientific, and the beverage kegs division. All of them are seeing, stellar growth across all fronts.
Well, got that view. Now, understanding the revenue aspect of the business, I would like to understand to what extent this record revenue of yours in this particular quarter is driven by the repeatable demand versus the one-off international orders.
So, the order intake in our line of business is always one time. There is nothing repeatable as it's always a capex item. But what we've done is we've developed such a strong reputation and foundation on a global basis that our products are delivered to over 100 countries globally. And our customers across, we've got the most marquee customer names across our segments. If you look at the industrial gases segment in the last quarter, we've received orders from, some of the world's largest and most reputed space companies. On the energy front, we've got marine fuel tank orders. We've got orders from Africa for mini LNG terminals. In India, obviously, all the marquee LNG customers are also, part of our customer base. So I think what we've done is we've really developed a very strong reputation, that's going to see us going forward.
Well, that sounds good. While moving on and understanding the overall order book aspect of yours, while we do see a good order booking in this particular quarter, I would like to understand what percentage of this particular order book is expected to convert into revenue in the coming 12 months.
So, this last quarter, we ended at about approximately 400 crores of new orders. Right now, at the 9-month ended, we're sitting at about 1,500, which is our record high. I expect to see the trend going upwards in the future. And, and on an annual run rate basis, we hope to continue in the 15 to 20% growth range across all our segments.
Well, got that. Talking about a broader market on a geographical aspect, I would like to understand how is the overall US demand of trade shaping up given the uncertainties gone by after the India-US trade deal?
Well, the US is, of course, an amazing market. But rather than traditional businesses, you've seen US go into more high-tech businesses. Recently, there have been great announcements in semiconductors, AI, and space. I think those are going to be the 3 verticals that the US is going to focus on. And I definitely see recently, of course, with the reduction in tariffs has also benefited us. Well, from year on year, there's been an increase, but there's been a reduction over the past 6 months. And that's certainly going to benefit us going forward. We've been in constant discussion with our customers in the US, and they're excited to expand their cooperation with us. So we see ourselves also being suppliers of high-tech, highly engineered projects to our customers in the US going forward.
Well, more orders fitted ahead of US. Got that point. I would like to also understand in terms of the margin expansion, we see a healthy expansion in this particular quarter. How sustainable is that current range, and do you see that maintained going forward? And what is the sustainable range if you expect from the margins going ahead?
So we've had a strong belief in this sector for more than 30 years, and over a period of time, as our products have been accepted in all the countries across the globe, we believe that we would be able to sustain this growth rate, not only in India but globally as well. To make a product that is designed in India, engineered in India, manufactured here, but to global standards is something very difficult. And we've achieved that, beating our Chinese counterparts, beating European counterparts and Americans to deliver our products globally. So I think we've done a great job, and by building a strong base, and I'm sure we're going to grow, great from here.
Well, got that view. In terms of the capex plan, what we are seeing so far in FY26, I would like to understand what are your further plans in FY27 as well, and how do you see the overall capex growing?
So in our segment, we aren't a very capex heavy industry. So I think our capex numbers are going to be in line with past years as we continue to incrementally grow our continue expanding our production capacity for cryogenic tanks. In the past 6 months, we started a new line of business in Brazil, where on a Go LNG, where we've started leasing of LNG tankers, and that is something we may increase our investment in our fleet, our rental fleet on a global basis as well. If we do that, then it may require more capex, but nothing substantial.
Well, nothing substantial in the capex, and got that view. But as you expect a stable margin in the coming quarters, I would like to also understand what's your guidance for FY27 in regards to the revenue growth and the revenue expansion aspect.
So, the feedback that I'm getting from our customers in the market is that, they love our product, they're happy with it. As long as they like our product and we see our end markets expanding, I'm sure we'll continue to see us gain a larger market share compared with our global peers. And if that happens, I certainly see us being able to continue the past trend of, high double-digit growth for years to come. In terms of margins, you've seen our numbers for the past 5 years. We have consistently been between at the low end 20% and at the high end 25% EBITDA margin, because we are a highly specialized engineered product that we make, which has a lot of technology in it. And I see that continuing. I don't see an expansion. I certainly margins remaining range bound, but on the growth front, as our product is adopted in more parts of the world, I definitely see this trend continuing that we have delivered successfully for the past 5 years.
Got that. A range-bound margin expected going further. Well, I would like to conclude by one last question in terms of the semiconductor as a whole space. So I want to understand what are your views in terms of semiconductor opportunities, and how do you see that going ahead in FY27 and the coming years?
So we see tremendous potential not only in semiconductors but in the solar sector as well. Both of these require a large amount of specialty gases, cryogenic equipment, and pipelines. So whether it is the first fab that Tata is putting up for semiconductors, or Micron's facility that is almost on stream, or whether you see next you might have flat panel display coming in, any high-tech electronic equipment manufacturing requires cryogenics, and we are fortunate to be partners with each and every one of these companies in their journey. And we're going to be here. We have a very strong supply chain. We're here to support the entire solar and semiconductor sector as they plan their journey, their growth journey forward.
Well, thank you, Mr. Jain. I got that view on the semiconductor aspect as well. I want to thank you for all the insights you've given on the Q3 and the year coming ahead. While if you look at the overall quarter, the quarter has had a good margin expansion. Further, the revenue also sees a good growth. But the management restates that they expect a range-bound margin growth, but they also see a good traction with regards to the semiconductor as well as the US as a market as a whole. So it's a wait and watch of how does the overall Q4 path of the management as well as the FY27.
Well, absolutely, Jasmeet, that it is. But you do have the stock also cheering that strong set of numbers and that expansion when it comes to the margins as well. But let's also talk about Trump's big warning to Netanyahu and shift focus to what's happening at the White House. US President Donald Trump has in fact given a new warning to Iran to make a deal. He even gives an ultimatum that if the deal doesn't happen sooner, it's going to be very traumatic for Iran. Let's go across and listen in.
We have to make a deal, otherwise it's going to be very traumatic. Very traumatic. I don't want that to happen, but we have to make a deal. They should have made a deal the first time, and they got Midnight Hammer instead. And this will be very traumatic for Iran if they don't make a deal. Look, if they don't make a deal, then it'll be a different story. But we had a very good meeting yesterday with Bibi Netanyahu, and he understands, but it's ultimately up to me. If the deal isn't a very fair deal and a very good deal with Iran, then it's going to be, I think, a very difficult time for them in the back. I guess over the next month, something like that. Yeah, shouldn't take, I mean, it should happen quickly. They should agree very quickly. Yeah.
Mr. President,
please.
Why does Prime Minister Netanyahu want you to stop negotiating with Iran?
He is, you're saying stop entertaining, stop talking to them? Didn't say that, we didn't discuss that. I'll talk to them as long as I like, and we'll see if we can get a deal with them. And if we can't, we'll have to go to phase two. Phase two will be very tough for them. I'm not looking for that.
There you go, you heard it. That's the big ultimatum coming in for Netanyahu as well. Let's see if that US-Iran deal sees the light of day. But that's all that we could pack for you on this edition of Lunchtime Trades. Thank you so much for tuning in.
Hi, this is Keshav Zikol speaking. He's not around right now. How can I help? It used to pester you, it used to irritate you, it used to be something that you didn't want. This is a massive pain point in India, by the way. Phone spam.
Tell me a bit about Equal AI. Tell me a bit about your journey here.
Being a third generation entrepreneur or from a family business and wanting to build your own company, the reality is the challenges are there and they're much harder in different ways. With the advent of agentic AI, we built something interestingly where it'll pick up your phone for an unknown call, speaks on your behalf, then connects the call to you, saying this person is calling for this purpose. Would you like to answer?
You saw what happened with Anthropic and those tools which came out. How are you looking at these fast-paced developments? Because business can become redundant overnight right now.
People who are unable to adapt to AI will get impacted, and that's going to be a societal crisis.
Running a family office or being involved in a family office is also work. I'm not saying it is, but there was this sort of comment and question and conversation.
Not much work, by the way, if you're just in the family office.
It's not much work. Okay, so I know it's out of the debate you're on.
Sitting in a family office is a more wealth preservation structure. Wealth creation or value creation structures is when you're actually building a company.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today. So let's see what's on the show today. Firstly, we'll be speaking with the management of Ingersoll Rand. Strong set of numbers, revenue driven by strong compressed air portfolio execution, and even Prabhudas Lilladher upgraded its rating on the counter to buy. Second stock that we'll be discussing on the show, in fact, we'll be speaking with the management of Ingersoll Rand to know what's the way forward here. G Power, that stock has been featuring yet again on our list, and this is largely because the stock has hit an upper circuit of 20% for second straight session after the company reported a profit in the third quarter of FY26. Third stock that we'll be talking about is Yatra Online. Strong set of numbers, again margin uptake, operational efficiency. The net profit though was impacted by labor code, but overall brokerages continue to remain quite bullish, and if you look at the volumes today, it's nearly 9 times its 20-day average for Yatra Online. We'll also be speaking about Genesis International. Now if you look at this counter, week 3Q third quarter numbers, margins declined massively to 21% from 47%. It fell by more than half a percentage points that we have seen. So very poor set of numbers coming in for Genesis International. And lastly, we'll be discussing about Uflex. They are seeing lower price realizations here, and also the tariff had impacted the third quarter of FY26. But what's the way forward is something that we'll discuss on the show today. So stay tuned and keep watching the small cap show that we have today. Now, if you look at the markets overall, the Nifty has been declining for the second consecutive session. In fact, after today's fall of more than 260 points that we have seen, the benchmark has fallen below the 50 and the 100 DMA, and it's down for the second consecutive session. Overall sectoral indices, if you look at major sectoral indices, have been trading in red. Nifty Metal has fallen the most. It's down nearly 2.9%, followed by Nifty Realty. Nifty IT, which was one of the top losers at the start of the session, has seen a smart recovery but continues to be in the red, down around 1.6%. Even the small cap 100, if you look at the index, continues to remain on the lower side. But Varsha, stock specific action, what are we seeing here?
Well, Somit, I would say a lot of stocks are in focus on the back of Q3, because we are about to end the Q3 season, earnings season, and a lot of stocks are in focus. Let's start with, Chaman Lal Sethia. You see the stock is buzzing. This is on the back of a huge volume. There you go. The stock is up 16%. The volumes are trading at 62 times. You have ISMO, wherein the stock is again buzzing on the back of volumes. Volumes are at 3 times of its 30-day average. You have phase 3, wherein the stock is in focus on the back of again Q3 FY26 numbers. Even Divgi Talk Transfer is also buzzing on the back of Q3. So a lot of stocks, if you see, are buzzing on the back of strong Q3 FY26 numbers, or the commentary, or expectations to be the Q4 would be good. Well, on the losers side though, let's see what are the stocks which are under pressure. You have Tiger Logistics under pressure. This is on the back of weak results. Company has seen degrowth in revenue. There you go. The stock is down almost 5%. You have Denta Water again under pressure on the back of Q3. Over here also the numbers were weak, or not as per expectations of investors. On Concord Enviro, again over here, if you see, not much growth is seen in Q3. The profits are flat year on year on Concord Environment, and hence the stock is down almost 9% in trade. Lastly, you have Office Space. Again, the stock is under pressure. So overall, the stocks are actually buzzing and losing on the back of Q3 numbers. But moving on, Ingersoll Rand, as we said, is in focus on the back of Q3 numbers. Just for the benefit of viewers, if I were to, say the key takeaways, the mixed set of numbers, margins did contract. A company has seen strong execution across compressed air portfolio. So overall, a good growth when it comes to revenue. But to speak about numbers and what lies ahead, I'm here joined by Mr. Sunil Khanduja, who is MD at Ingersoll Rand. Mr. Khanduja, welcome at NDTV Profit, and always pleasure to have you. Let me start with margins over here. If you see, there was a good revenue growth, though margins declined, gross margins declined 344 basis points year on year, which impacted your EBITDA margin as well? What was the reason behind the pressure in margins, and what's the outlook when it comes to EBITDA margin for FY26?
No, definitely. Thanks for asking this question. This is more of, if you see, we have done the best quarter so far in terms of revenue. 455 crore is always one of the best quarter for us. But this is more of product mix which is changing for us. As you know, compressor industry is more of whole good aftermarket combination. We have approximately 60% from whole goods, 40% from aftermarket. So Q4 was mainly for us more of whole good execution, where we could see execution of large orders within 1 quarter. In Q3 we have delivered 40 plus big centrifugal machines in a month. So this is more of combination of whole good and aftermarket, so which is changing the mix, and there's a difference in margin as of now. Coming to Q4, I think pipeline is good. We can see for whole good aftermarket pipeline is doing pretty well, and we definitely expect for good number.
Sir, if you could, quantify for the benefit of viewers, what is the expected revenue growth for FY26 and also FY27, because now that's the main focus point, and where can your margins go?
Definitely, as you know, this industry, India is pretty good in terms of growth, and there is high forecast in market. Demand is growing from semiconductor, electronics, pharma, power. Many sectors are growing, and we are also in line with the growth of market. We are really working very closely with our existing customer and trying to diversify our portfolio as well. Financial year 26, what we are going to finish in this quarter is, as I said, very strong. What we estimated, we are very close to those estimations in terms of forecast, and we look forward for a nice growth in Q4 as well. Financial year 27, I'm sure you must be aware, we have opened a new facility. This quarter, we started our Sanand manufacturing, which is definitely going to give us a boost to double down our manufacturing in next 4 to 5 years. And expectation from next year is also like mid-digit, double-digit growth, which is going to give us from not only from existing factory, but upcoming factory with our large, engineering special compressors, what we are going to launch from Sanand factory as well. So we are highly optimistic. We will definitely discussing numbers once we are close to this quarter for next year. But expectation is to meet our target of doubling this business in next 5 years. We are very well in line with the expectation in terms of growth.
Right, sir, you did mention that margins will recover. So gross margins will recover. So can we again see the 44% mark in Q4? And do you foresee that number to be stable in FY27 as well?
See, the focus, as I said, our main focus is to improve our top line, definitely, which is going to be there with the growing demand of market, and bottom line should definitely follow. Important is to provide cost-effective solution to our customers so that we are always standing for them. And our focus always say, if we grow top line, bottom line will definitely follow. So we expect a good growth in terms of bottom line as well, as we have very good pipeline for not only for whole good but aftermarket as well, which is going to give us a big jump in margin also in coming days.
Also, sir, if you could just give me some insights on the order book. What was the order inflow in the third quarter? Where does your order book stand? What is the kind of order inflow that you're expecting in this calendar year, that is 2026?
We normally track ourselves. What is our order booking versus revenue ratio? So which is pretty healthy. We have entered to this quarter with almost 104% of order booking. Like my revenue targets for our company and what we are bookings are much better than what we're supposed to do revenue, because our booking is the kind of model we operate is highly customized, long-term orders also. But overall, there is a quarter-to-quarter growth in terms of order booking as well, which is giving us a space to breathe and then definitely look for additional quarters to grow our numbers.
Right. And also, sir, you plan to expand compressor capacity by 50%. By when will this be completed?
This is again from our Sanand factory, but we started in October. We have plans to add new product portfolio not only for Indian market but for export as well. So we see in next 3 to 4 years we'll be ramping up this manufacturing, and this is going to be a double-digit growth definitely in Sanand plant as well. So full capacity perspective, we see at least 4 to 5 years will take to make sure our Sanand factory is running with full capacity.
So as you were mentioning that by commissioning the Sanand facility, your overall manufacturing output, that increases by around 1.5 times, I believe. So at least you could give us some color on what could be the incremental revenue that investors should expect from Ingersoll once you achieve nearly 90-95% capacity utilization.
See, I can definitely speak about what are we going to produce in terms of technology, product, and market is very dynamic. We are in a model of capital goods selling where we need to really hunt customer every day and look forward for market. So in terms of my product expansion, we are going to produce engineering to orders. We are going to produce highly customized, nitrogen solutions. We are going to produce air gas compression from this market, which is all new as per my current portfolio. So as market grows, there's a demand of biogas compression is coming in India, and we have developed a solution which we are going to operate for biogas market, nitrogen generators, which is going to be a additional to our existing pack solutions that we deliver to our large customer. We are going to extend that portfolio. So in terms of adding numbers, different products will be adding, will be not only for Indian market but for export, but which is going to give me, but overall if I see numbers is all like to meet 5 years double growth. That's what is the plan.
Right. And also, sir, what percentage of revenue comes from service segment, and where do you want to take that percentage to?
No, nice question. So if you see, compressor industry is highly dominated by service. Service is a basic bread for us. We would like to grow this. As of now, my parts and service revenues are approximately 40-45% of total revenue, which we would like to take it to more than 50% in coming years, which is going to give us a good jump in our bottom line as well.
Thank you, sir. Thank you for joining us and giving us the way forward for Ingersoll. It will be great speaking to you next quarter as well. Let's also welcome in our fundamental guest, Avinash Gorakshakar, founder and head research with Avinash Mentor. Avinash, you heard the management. They haven't given any numbers, but they are quite optimistic about the growth going forward. And even the gross margin contraction that we saw this quarter is expected to reverse going forward. So they are quite bullish. But how are you looking at this counter at the current valuations?
I think, Somit, this is definitely a well-established MNC company, and the best part is, their collaborator has been very helpful in increasing their exports, from the Indian operations. I think looking at the kind of investments they are making in the Sanand factory and the contribution of this factory in the coming financial year, that is FY27, I would not be surprised that top-line growth could further increase. The company has a very strong product mix, a very good margin kind of picture as of now. And I think, despite the fact that gross margins have marginally reduced, the overall volume opportunity is very large. So I would not be surprised that the fourth quarter could be equally better. And I think this is a stock where the only concern is, I think the liquidity in this stock is fairly limited. So, floating stock is very less, and therefore the stock is fairly volatile. But from a portfolio perspective, I think this could be a good entry point. I think somebody who wants to, invest for the next 12 to 18 months, I think definitely good prospects both from the domestic as well as the export market.
Got that view. Well, moving on, time to dive into the BSE FNO market setup and the Q shaping in trade today. Let's bring in Sharad for a snapshot for the trade today. Sharad, over to you.
Well, looking at the options data, there's a mild recovery happening for Sensex, but Bankex is not participating so much in it. Largely, we see a sea of red is still there, but a good or short covering is there in certain IT names. Bajaj Finance seems insulated for the second straight day. There's an AI angle to it, and SBI is largely there in the green, but see, it's still selling is still there, and Nifty, the recovery which was there, I mean to say in the Sensex, that has actually come down as well a little bit. But nevertheless, this market is still, looking at the important technical levels. Let's look at how the contracts are playing out to see where the actions are. Call options are seeing a bit more move there. The PCR numbers are still, in the lower side, below that 0.6 levels. And if you look at the stocks, the long build-up, I doubt there will be any proper setup for a long build-up. But let's just pull out the long build-up stocks also. And of course, Eicher Motors makes it to the list. I've already discussed Bajaj Finance with you. And short covering is Piramal Pharma and HAL. Their stocks up almost both of them up to 2%. And long unwinding, we have Kalyan Jewellers and BSE 500 ETF makes it to the list. I think it should not make it to the list, but interesting it is. Short build-up, Muthoot Finance and NMDC. This is concern, and Muthoot Finance has not shown any sign of recovery despite coming with good numbers. Brokerages are raising concerns and the valuations also. But these are the stocks buzzing in the F&O space.
Well, thank you, Sharad, for that extensive F&O setup. Moving on to our next small cap stock, that's Yatra Limited. Now, the stock price move must be limited on this counter because overall the day is quite muted and we are seeing some selling pressure coming in the market. But if you look at the volumes for this counter, it's nearly 9 times its 20-day average. And this is after the company reported a stellar set of numbers. Revenue were up 9%, gross profit increased 30% on a YOY basis. EBITDA jumped nearly 66%, while the net profit number, that was up 21%. This was also impacted because of the labor code. But if you look at the EBITDA jump, it's nearly 66%. Margins expanded by nearly 300 basis points on a YOY basis to close to 8.8%. So stellar set of numbers. Even brokerages, most of them, at least 2 out of the 3, have maintained their ratings and target price, and they are quite steep. For Investec, they have a buy rating with a target price of 270 and the stock is trading at just 170 rupees. They say that it's another strong quarter that the company has reported. Growth has been driven by growth in the B2C on the back of seasonally strong quarter. And they are also saying that Yatra is seeing considerable traction when it comes to the B2C air demand, and that segment has reported a volume growth of nearly 14%. Now, they believe that Yatra's B2C vertical has turned around and will see gradual growth even going forward. The MIC vertical, which is the event management kind of vertical, that has reported a soft Q3, and this was largely impacted because of the flight disruptions that we had seen in this quarter when it comes to Indigo's operation. But they're expecting a strong recovery in this as well in the fourth quarter of FY26. DAMCAP, they have maintained their buy rating with a target price of 210. They are saying that that Yatra is becoming a market leader in the air traffic as well. They say that growth was mainly attributed to the B2C leisure travel during the seasonally strong travel quarter, and the B2C initiatives that the company has taken over the last 6 to 9 months have led to improved take rates for the company. On the B2B side, they are saying that Yatra continues to grow faster due to new customer additions and strong pipeline conversions at this moment. Just one brokerage, that was JM Financial, they had downgraded their rating by 1 notch, still not a sell rating. They had downgraded their rating to add from buy and had cut the target price to 180, and this was largely to factor in the labor code impact and because of some revenue slowdown that they're expecting going forward. But overall, a strong set of numbers. The stock is up 2%. Volumes continue to remain nearly 9 times its 20-day average. Avinash, how are you looking at Yatra at the current valuation? The stock has run up sharply in the last 2-3 months odd, but are the valuations still attractive?
I think, see, the numbers have been very rock solid, and I think the fourth quarter also should be equally stronger. A strong growth of EBITDA of almost 60% is one of the highlights for the quarter 3. And I think the company seems to have provided 100% of the labor tax code. So I think this charge may not be coming in the fourth quarter. But overall, I think the outlook for FY27, Somit, looks quite promising. And I think this is a space where you could see a lot of traction both on the volume and the margin side. We would suggest that, maybe the stock corrects a bit, maybe around 160 or 155 odd levels could be a good entry point. But those investors who are holding on should hold on, because we feel that this space is definitely going to see a lot of traction, and Yatra would be one of the big beneficiaries.
Right. Well, moving on, GE Power. Well, the stock is gaining for the second straight session. The stock is up almost 20% in trade and has delivered a sharp turnaround quarter with double-digit revenue growth and a dramatic expansion in margins as operating cost fell and discontinued losses narrowed. Jasmeet joins us for more details on that. Jasmeet, over to you.
Well, Varsha, thank you for that. G Power remains in focus for the second consecutive day. As rightly said, the stock hits the intraday high of 20% in trade today, so as followed by yesterday in trade. So in last 2 days, the stock is up nearly 40% and this buzz comes on the back of good set of Q3 numbers of the company. If we look at the overall performance, we saw strong Q3 and a double-digit growth in terms of the revenue. Further, the other expenses have dropped considerably, helping the overall EBITDA expand in this particular quarter. While if we look at the other expenses, even they have dropped, helping the overall net profit also increase in this particular quarter. Let's quickly understand the key numbers. The revenue is up 21% at 385 crore compared to roughly 316 crore in the previous quarter. While if you look at the overall EBITDA, it's up to 124 odd crore versus 3.69 crore. We see a huge cost contraction coming in here, what led to the overall EBITDA expand. But in terms of the overall margins, even they have expanded from 1.16% in the Q3 of FY25 to roughly 32% in this particular quarter, showing a long-term growth outlook going ahead. In terms of net profit is up by 290 odd percent. That's roughly at 72 odd crore versus the loss in the previous quarter, which stood at 18.5 crore. As rightly said, it's a good sharp turnaround quarter for this particular counter, but it's a wait and watch if this kind of performance is continued in Q4 and FY27.
Right, got that point. Well, Avinash, a sharp increase in margin from 1% to 32%. If you track this counter, what do you think? What should investors do? Because it's like straight. The stock is in focus for the second straight session. This is up 20% for the second day. What should investors do? Should they book profit considering the market situation currently?
I think, my guess is that a lot of operating leverage seems to have been played out because margins moving up from 1% to 32%, the profit after tax coming at around 75 plus odd crores, clearly gives an indication that the company has been utilizing its assets optimally. And hopefully, if the fourth quarter is a repeat of the third quarter, then I think you could see a further re-rating. I think, investors who have entered the stock pretty early can obviously book some profits, but I think fresh buying is not advisable. A stock which is touching 20% circuit levels for last 1 or 2 days, I think one should expect, some cooling in some more time, and that could be a good entry point. So I think long-term prospects are good, but not advisable to buy at the current levels.
Right, got that view. Well, let's pull up chart for UFlex. Well, this stock is actually not doing that great in trade. It's down almost 8% on the back of Q3 numbers. Let's see what are the key highlights. If you see, EBITDA margins were at 11%, PAT at almost 2 crore. Import-driven price pressure and GST transition has impacted demand for this company. Talking about the film segment, Q3 sales volume, if you see, is down year on year. Capacity utilization was impacted by global tariff uncertainty, and 9-month production though was stable. India demand softened due to imports. Onto the flexible aesthetic segment, over here Q3 sales volumes were up 7.6%. FMCG customer deferring pricing due to inventory correction. On to the US market, Q3 sales volume dipped due to US shutdown and lower consumption, though 9-month volumes was down 7% year on year. Europe sales was also down due to holiday season and the cheap imports. Retail trends improved post-quarter. On to the outlook, well, packaging industry's outlook remains strong as per the management. Import stabilizing, price recovery is expected ahead. New global trade agreements is expected to improve supply chains and major capacity additions to fuel medium-term growth. So overall, but outlook is looking better, but at least Q3 numbers are not that great, and hence the stock is down 8%. Avinash, what is your view on this segment? Considering, because this segment used to have only 5% of tariff, but now the tariff has been increased to almost 18%. What's your view on this overall sector in the films, in the packaging films segment?
I think there has got to be some kind of demand compression in this quarter, and I think pricing has not been very favorable for UFlex. Although UFlex has a very strong customer, ramped up. But if you ask me honestly, the GST change has also impacted the profitability. So I think, it may take maybe another 1 or 2 quarters for the company to recover. Although the overall packaging market will grow, whether UFlex will be able to improve its margin from the Q3 numbers is something which we'll have to check out, once possibly some more outlook and commentary is coming from the management side. we are a little cautious on the stock, Varsha. So prefer to not buy at these levels. We prefer to wait for at least the March quarter and then take a call.
Well, thank you, Avinash. Thank you for joining us and giving us your perspectives on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Bazaars. Stay tuned and keep watching NDTV Profit. Ask Profit next.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch.
Hello and welcome. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me is Somit Sarkar. And over the next half an hour or so, we'll try and solve all your stock-related queries. So do start sending them if you haven't already. And we're also picking up some missed queries from the morning as well. We were able to solve around 50 queries. It's much below the average that we've been running in this week in the morning show. But here it was the last phase of the earnings season and a lot of stock-related queries around it. So we will start taking all of them. If you haven't already, do start sending them. You can also call us on the number that will be flashing on the top of your screen. Before we do that, a very, very quick check of how the markets are doing, because the IT pack has been one of the biggest recovery stories in today's trading session. While we're still down about almost 300 points on the Nifty 50, the Nifty IT, and you see that recovery there, almost down 450 points now. But at the start of the trading session, it was down 1600 points. So since then, it's been a big recovery on that. The mid cap and the small cap is the other key picture, because we continue to monitor those indexes as well in terms of individual names. Seen some recovery, but that hasn't yet sustained through, in a sense, to go above the round take of 1.3% on both those indexes and BSE 500 as we wrap up this particular list, because we've seen that individual names which are dominating the news for Engineers India, and we'll put the focus on this stock yet again in India market close, so do stay tuned for that. Jamna Auto Post results is up 6.8%. Linde India, Vardhaman Textile, Ingersoll Rand. Also, we spoke to the management in the previous show. Stocks up almost 4.7%. On the round tick, though, it's been a weak result yet again from Cohance. Brokerages have also cut target prices, and Muthoot continues to be, in a sense, the accident of the day as well. But let me welcome in our guest for today, Ruchit Jain, the Vice President Technical Research at Motilal Oswal Financial Services on the technical side. G. Chokalingam, as always, joining us from Economics Research on the fundamentals. Gentlemen, both of you, thanks so much for joining in today, and a very good afternoon as well. The first question, largely, it's actually an open-ended one from Venkat coming in. He wants to take some exposure on the data center stocks, Mr. Chokalingam, and he's asking if you can give him some recommendations for that. Do the usual suspects, the likes of Anantraj amongst others, focus in that list, Mr. Chokalingam?
I would rather suggest L&D. Of course, that is not the dominant business, but L&D has set a very aggressive target for getting into data centers. So if somebody is willing to wait for 1-2 years, I think L&D is a better play, because now small and mid caps are once again cracking. So it is better to focus on Sensex and Nifty stock where DAs also can support. So therefore, I like L&T to play on data center, maybe indirectly.
He's coming in from Vaibhav Kumar, and he wants to know the long-term outlook on three counters, and which one would you prefer, Mr. Chokalingam? Shakti Pump, NTPC Green, SJVN.
Shakti Pump one can hold. Of course, there's a lot of competition in the solar pumps. And second one, sorry.
It's NTPC Green and SJVN. So out of these three, which one would be the best one?
I would sell NTPC Green. Valuation is highly stretched. SGVN, one can hold.
Okay.
Got it, Mr. Chokalingam. The next query that we're picking on is, it's on Black Box. Actually, this counter was in focus yesterday on the back of Q3 results as well as the acquisition. And Madhava is actually asking this question. Mr. Chokalingam, do you track this counter? Did you track the corporate update yesterday? And any view on this stock?
No, I used to track when it was called AGC network. Somehow I'm not comfortable in tracking it now.
Ruchit, anything on the charts? Because since it is related to the IT and infrastructure space, we're seeing the pressure on the stock today, but any view on this one?
I think the stock is more into a consolidation phase. In the previous days, whenever the stock is coming around with 600 mark, it is witnessing selling pressure and not able to surpass or sustain above that. I think for any kind of trended up moves, until the stock surpasses 600 mark, the overall trend remains sideways. 200 EMA is around 500, 510. So that remains an important support.
Got that view, Ruchit. But another question, yet another open-ended one this time to you, Ruchit. A viewer, actually Prashant from Chennai, is asking a couple of stock recommendations for the next 6 months. Anything that it's on your radar today?
So I think from a 6 months perspective, we like ONGC at current levels. Stock seen a huge consolidation phase. From that about 1.5 years consolidation, we have recently seen a breakout. Today, definitely, the entire market is down, so the stock is also corrected. But no, on dips, one can use that as a good buying opportunity, where the price-wise downside seems to be very limited. On ONGCs would be one stock that one can track. And I think no, within the NBFC space, Bajaj Finance is another stock where one can look for taking fresh exposure at current levels. Although already the stock has gone through a corrective phase, now they started forming that high top, high bottom structure, so we can expect a good outperformance.
He's coming in from Ramesh from Chennai, and he's holding few shares of RITES, and he wants to know the long-term view here. Mr. Chokalingam, any view on RITES?
One can hold it, particularly after the recent correction. The long-term potential really looks very good. There is no doubt about it.
Got the view, Mr. Chokalingam. The next question that's again coming in is on Shree Cements. Now, our viewer actually is holding 20 shares, bought at 26,442. He's mentioning specifically that he bought it post the Q3 commentary by the management. Mr. Chokalingam, what did you make of the results? Because the expectation were that there was some decent growth in this quarter, but Street was disappointed post Q3. Your view on Shree Cement, as well as if it's your top pick in the cement space?
I would go with Ultratech leader, because I have got an advantage of being in index, because that is very important when whole market is under stress. As far as Shree Cement is concerned, yes, medium to long term investors can hold. It trades around 52p on trailing basis, but then that has been the case for the stock. In fact, it used to trade 60 to 70 range for very long. Yes, December result is not great, but then fact is that it's still one of the most efficient cement companies, and over the years it continues to grow. So therefore, I would give a whole recommendation on Shree Cement.
V. Murli from Bangalore is holding 200 shares of Emcure Pharma. He's saying that despite the strong Q3 numbers, the stock has fallen. Mr. Chokalingam, did you get time to go through the Emcure Pharma numbers? Any view that you have here?
Yeah, it's largely on the domestic play. So therefore, I don't see any major concern for the stock. So with the marginal correction and also the trading at around 30-31 PE, I think it is quite reasonable for this company. So I would give whole recommendation. So in case it falls, I would suggest accumulate.
Well, the next question is coming from Shankar, and he's asking if he can buy into Tata Capital as well as Tata Commercial Vehicle right now. So he definitely has an affinity for the group. Since both are recent listing, Mr. Chokalingam, let me come back to you. Either of those stocks that is in your radar right now, and should Shankar go ahead and buy them?
Tata Capital trades around 3.4 times price to book value, which is quite reasonable for an industrial house owned NBFC. But short term, I don't think it can make any significant return. But if somebody wants to hold it for 2 to 3 years, this is a good stock to hold, and one can accumulate also on decline. Yes, Tata Commercial I prefer towards over Tata Passenger Vehicle, because Tata Commercial is also play on the domestic market directly and indirectly. Indirectly through this Tata Capital as a industry company, whereas Tata Passenger has technology company which has exposure to global market. So therefore, both are looking good for me, Tata Capital as well as Tata Commercial.
Next query is coming in from Agota from Kolkata. He's holding 95 shares of Siemens Energy, bought at a price of 2,977. Ruchit, he wants to know, should he hold this counter for the next 2 months?
I think is wait for a pullback move towards 2900 to 2950 range. The stock has seen a decent up move in last few trading sessions. The retracement resistance would be around 2950, and if it comes over there, just take a review again.
Got the view, Ruchit. But another very interesting question coming in from Anusha from Chennai. Mr. Chokalingam, she's asking if it's the right time to invest in the small cap index via an SIP mode. So a small cap ETF she can pick is her question. Would you recommend that, or would you recommend more stock specific action in the small cap space? Because after the correction, is this the time now to start an SIP in that zone?
Interesting question. It all depends upon investor's profile. Person who wants to take a little more risk and create a lot of wealth, one should go direct equity in small cap, provided they understand the fundamentals. Because that kind of stocks like a BAC and all, in 6 years they created even 30 times return. Of course, it is not easy, but that kind of opportunity is available only if you go through the direct equity, provided person has capability to do research and do it. Otherwise, yes, small cap one index one can bet. But again, here, if you are investing everything in equity money in only the small cap index, that is also very risky. As an equity strategy, I always suggest that you try to have 50% exposure to Sensex, Nifty, or top large cap index stocks, either stocks or through index. You balance only maximum 50% for small and mid cap. So if somebody is able to do that balancing, then yes, this is the ideal time to go for small cap index because it has corrected a lot and it might continue to correct till March.
Right.
I would recommend that.
Right. The next query is coming in from Don Francis from Kerala. He has 24 shares of TCS bought at a price of 3,173, currently sitting on a loss. Ruchit, should he book loss or should he continue to hold?
No doubt the trend is negative for most of the IT stocks, the selling pressure that we have seen. A bit momentum readings are a bit oversold, so wait for some kind of pullback moves, maybe towards 2800, 2850, where you can take a review again.
Got the view, Ruchit. But Ruchit, also just a follow-up, what do you make of the pullback? Is it something that was expected on the charts? Because it's definitely taken a lot of people by surprise. What would you say on that?
So this was not the first day where the IT stocks have corrected. We have already been witnessing since last 7-8 days, IT stocks have fallen one way from their highs. So momentum readings are in oversold, and in such setups, we do see some in-between pullback move. But just 1 day of pullback will not change the trend. We need to see a sustainable up move in terms of high top, high bottom. Then only one should turn the view bullish on the IT space. But for now, we are also advising to keep a wait and watch approach.
Got the view, Ruchit. But the next question also, Ruchit, coming your way from Anand from Chandigarh. He wants a 3 to 6 month view and wants to buy ABB. Would you recommend that trade?
Can buy some quantity at current levels with a room to add more if we get decline towards 5,500 near future.
Next query again coming in for you, Ruchit, and it's from Sudipto from Mumbai. He wants to know whether is it a good time to buy Wari Renewables at a price of 890 for the next 3 to 4 months.
Would not advise to go long at over here. Overall, we can see that the trend is still negative. The stock has even recently breached its 200 EMA, turning the mid to long-term trend weak as well. So avoid bottom fishing at current levels.
Got that view, Mr. Chokalingam. Got the view, Ruchit. But the next question, and Mr. Chokalingam, this is for you in the IT pack now. Our viewer, Satyan is asking your view on Oracle Financial as well as Cyient. Is it time to add this is his portfolio? And he's mentioned that I think you would have recommended this in some of the previous shows. But how do you view these two counters specifically, and within the IT pack also the recovery coming in? How do you see that as well?
I may be wrong in my understanding, but I have a very, very strong view. I think this is a great opportunity to buy OFSS. I don't think AI tools are going to replace the banking financial solution or banking software products. It's going to be too risky for banking sector to replace, vendor like Oracle and use in-house AI tool to manage the banking operations. And it gives you dividend yield also around 4%. It's a very great stock in my view. I believe the recent crash is a good opportunity. Similarly, Cyient, yes, my knowledge of, advanced knowledge of AI impacting IT services is limited, but I still believe the market has overreacted. And even if there is going to be further moderation in the IT service sector export growth because of AI, I believe what we saw from 2014 to 2019, the consolidation in terms of acquisition of small and mid-cap IT stocks, that would get momentum once again. I'm not forecasting Cyient would be taken over, but I believe company like Cyient, which is cheapest, in terms of valuation at 1.5 times EV to sales, is one of the most attractive. Added advantage with the Cyient is that it has got a semiconductor subsidiary which started also operations. So therefore, I believe today is an ideal day to start accumulating once again both Cyient and OFSS.
Well, that's a bold call coming from Mr. Chokalingam. He has, continuing his momentum and his bull call on Oracle Financial, accumulate a good time on Cyient as well. The next question is on Jamna Auto, and actually you saw the results also just come in, and the stocks reacted very aggressively post that on the upside. But Ruchit, our viewer, is asking a short-term query, Sunil from Mumbai, on Jamna Auto. Is there anything on the charts that you can recommend as a stop loss and a key target?
The structure looks positive. The 20 DMA support is around 129. So 129 should be the stop loss on long positions. On the high side, 154, 155 is where you can expect near-term targets.
Got that view. But the next question that's coming in is, yet again, this time actually is on GNFC. Now, our viewer Satish has bought it at 520. Let's pull up that counter, see where it is trading right now. He wants to know if he should continue to hold this counter or book the loss. So it's trading at 465 and Mr. Chokalingam, he's bought it at 520. What should he do? Should he average down, continue to hold?
It may not give a very attractive return in the short term. It might disappoint, but let me tell you that it is one of the most attractive chemical stocks. Though it has fertilizer, it is mainly profits are from chemical. Huge cash. Cash is 45% of the market cap, and a lot of expansions are happening. Products are import substitute, so rupee depreciation also will help. I'm pretty confident that the stock will give very attractive return in the medium to long term, that is beyond 1 year. So I would continue to maintain buy call on GNFC.
Got that view, Mr. Chokalingam. But next question is on First Source Solutions, yet another casualty in that sense for the IT pack by Ruchit. Our viewer has bought 100 shares at 344. It's trading at 261 now. He's asking if there's any chance of it coming back to his buying price, or should he buy down right now? What would you recommend?
The trend is negative, so no point averaging the stock which is in a downtrend. Major support is around 240, 245 zones. So I think we could see some further correction towards that range. So I won't advise to buy more. Any kind of pullback move, use that as an opportunity to lighten up your positions.
Hopefully, Divya, that helps your stock-related query. But the next question, yet again, coming in on a stock that's not done very well for investors, and that's on Varun Beverages. Now, Sri Kumar Nair is holding shares at 642. About 100 shares at that level, so she's currently sitting on a loss. Asking if she should hold on to this counter. Mr. Chokalingam, how do you view this counter? It's expensive, and the last few quarters, while there has been some decent commentary, it's not excited the street as well. How do you view Varun Beverages, and should Sri Kumar continue to hold average down at these levels? What would you recommend?
One may hold it considering the track record, but December quite pathetic. The margin has slipped down very badly, and therefore operating profit has fallen a lot. So at best, I would give a hold call. I would not suggest accumulating at the current price also.
Got that view. The next, so it's now time, Ruchit as well as the Chokalingam as well as viewers, for the rapid fire round of this edition of Fast Profits. So request you both to keep your answers on buy, sell and hold. The next, the first question actually, it's largely on IRFC. Now Ashok is holding shares at 119. Ruchit, should he continue to hold?
No, exit on pullback towards 116, 118.
Vidya from Hyderabad is holding 200 shares of E-Clerks, bought at a price of 4,000, currently sitting on a loss. Mr. Chokalingam, should she exit?
One can go for tactical recovery to exit.
Moil is the other counter, Ruchit. Our viewer Ravindra Nathan has bought at 280. What should he do?
Book profits and exit your portions.
Right. The next query is coming in Next query is coming in from Kalyan. He wants to know whether is it a good time to add lemon tree, Ruchit?
No, wait for some more decline. Maybe around 120, 118 you can review.
On IEX is the next question. Our viewer has been holding at since 2021, bought at 155. Mr. Chokalingam, with all that's been going on, what would you recommend?
I would sell even at this price. It has lost the monopoly. Now competition is coming from NSE, BSE. It's going to be very tough.
Ishwar from Kolkata is holding HDB Financials right from the time of IPO. Should he sell this or continue to hold, Mr. Chokalingam?
For very long term, one can hold. In the short to medium term, most unlikely to make any big money from this counter.
Ratish Menon has been holding LIC since its IPO at 847. Mr. Chokalingam, should he continue to hold?
Yeah, one can hold it.
Sriram from Chennai is holding 100 shares of Tata Power at an average price of 87, currently sitting on a good profit. Mr. Chokalingam, should he book out?
After the major correction from the peak, I would give a hold call on the stock.
Ruchit, should Krishna buy into KPI Green for the next 6 to 12 months? He's holding shares at 450.
Avoid fresh buying over here, and if pullback move towards 450 would be face resistance.
Kaushik Rana from Gujarat wants to know whether should he continue to hold KPIT Tech for short term, Ruchit?
No, exit on any small pullback moves.
Cohance Life Science 100 shares bought at 1250 by Anil. And he's asking a very straight question, Mr. Chokalingam. Does this company have any futures? What he's writing? What would you recommend? What should he do with, since he's bought it at such elevated levels?
One can go for tactical rebound because these kind of stocks have fallen a lot. So I don't want to give sell call. Go for a tactical recall to exit, tactical recovery to exit.
Mahalakshmi from Hyderabad is holding 320 shares of Lodha Developers, bought at a price of 1022. Wants to know the view for the next 6 months, Ruchit.
Hold, the downside seems to be limited from here on.
Studs, another company we don't discuss too much, the helmet maker, and our viewer Abhishruth has been holding since IPO. Mr. Chokalingam, do you track this counter? Any view?
No, sorry, I haven't tracked it.
Well, Ruchit, any quick view? I know it's a very recent listing, but down since the IPO price of almost 575. Any view?
It's not about the data, but short-term trend does not seem to be positive.
Got it. Well, thanks so much for that, Ruchit, as well as Mr. Chokalingam for helping us solve 31 queries in this very short amount of time. So appreciate both of you and your views. But viewers, that's all the time we have on this edition of Ask Profit, the afternoon edition. We've solved 81 queries throughout the day. So hopefully these have helped you. We will see you next week. It's been a bumper stock solving week in that sense. India market close comes up next, but we'll see you on Monday.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade.
Good afternoon and thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew and with me is Sharad Dubey. Guys, if you thought at the start of the week or even after the first 3 sessions of the week that you would use the profits that you generated in the equity markets and you would have a great Valentine's Day.
And now it's erased.
Well, that's not a good idea, right?
Alex,
so
it's Friday the
unfortunately.
13th also.
See, he's bringing you these facts.
But I'm not going to jinx it anymore.
I'm focused more on the Valentine's Day celebration. But having said that, look, it's not all bad. The thing is that the pressure that you saw on the IT index earlier today, that has subsided by a significant margin. So you have a situation where the Nifty IT at least is off the low point of the day. The benchmark is not. And we'll take a look at that. Sharad, let's go across to the wall and take a look at it.
And Alex, look at this advanced decline ratio. Again, is the same story playing out, on the declines front.
Yeah, absolutely. Yesterday looked like this. It's actually a bleaker picture than yesterday. At least yesterday, the declines on the benchmark were capped. Today, cuts of about 1.1%. And the broader markets, let's pull that up as well, because today, this is what you're seeing, the pressure in the broader market. The mid-cap index dropping about 1.2%, the small-cap index by about 1.2% as well. But let's take a look at the heat map for the Nifty 50. At the start of trade, right here was where you were seeing the IT pack.
That has changed.
That has changed. You're seeing Hindalco, and we'll talk about why this stock is under pressure. You're seeing Eternal, you're seeing HUL, which is under pressure after its earnings, and the fine print and the outlook and all of that has been parsed. It's under pressure. ONGC under pressure on account of crude oil prices coming off. It was heading high on account of crude oil itself. But let's talk about the gainers.
The financials are doing really well, and Bajaj Finance, apparently there's an AI trade happening because of that con call which was there. But nevertheless, it's the top gainer in Nifty, and look at the financials, SBI is there, SBI Life is there. That's also where some value buying is happening.
But unfortunately, you have the two heavyweights. Why don't you point those out? Reliance Industries, HDFC Bank. These are two. And let's pull up the constituents, or rather, let's pull up the contribution chart, and you will see that these two will rank in all probability right here. There you go. It's the top two declines are weightage wise Reliance Industries, and then you throw ICICI Bank into the mix, and no wonder you're losing as much as you are with 275 points down.
Alex, there is not a single IT
50.
company there.
There isn't, and that wasn't the case early this morning. So what are the factors that are at play at the end of this trading week, Sharad?
Alex, it's just not only IT, there are other sectors also which are taking the beating. and the AI related stress which is there globally, it's still impacting the entire sentiment for the market. And look at the market heat map, there's literally a sea of red coming in across the sectors. But let's look at the key triggers. What will be very much important to look at. The Nifty's important level of you could say are almost 25,600 key levels that has been breached. I was giving you the range 2 days before, 25,600 to 800. Both the levels have been breached and it's on the lower side, so that's a bit concern. A little bit more sell-off can come. Let's look at another important trigger for the markets right now, and that is the Nifty Bank. That's a key congestion level, nothing to be worried about, but yes, it's on a downward track. 60,000, if that breaks, then we can look at 59,000, 59,500 levels. That's where the concern is. Short covering is seen in the IT positions. Alex has pointed out the biggest losers might not be IT today because there are other sectors also, there are rotation happening, but yes, selling has intensified and broader indices are not supporting market breadth as well, and that's a concern. It's happened yesterday also, it's happening today also, and that's a concern going ahead next week also. Largely the reality metal energy, that is where the biggest sell-offs are happening. Energy, talk about Reliance is of course dragging that, and if you look at the important triggers, that is the European market that has opened mixed. Nothing important has come up from these markets right now, but today there's a very important macro data coming in from the US CPI inflation data. We'll be watching out for that, especially when the Fed rates trajectory is there. That's something which we'll be looking out for. Alex, what else is there?
Well, it is the watch list that we're talking about. And you mentioned Bajaj Finance, Sharad, and that in fact is something that is on the top of our watch list. The positive commentary with regard to the number of calls that AI is taking for Bajaj Finance in terms of productivity, that is always something that bodes well. Remember that this company has been an early adopter of technology, and it seems to be something that they're working on going forward as well. Lupin, on the back of numbers, the stock might have been under pressure earlier today, but it did have a strong US business performance, and that is despite the underlying performance of various other pharmaceutical companies in the US not being very strong. ONGC under pressure on account of Brent crude, which has fallen as much as 2.5%. Muthoot Finance has beaten, but it's actually lost quite a bit of ground. So actually a number of these stocks, despite the fact that you see it in the green, are in the red, and significantly so. Muthoot Finance in particular. Hindalco is also in the red on account of Novelis plant fire, which has impacted the Q3. You have Honasa, you have Engineers India specifically, where the revenues increased quite considerably. It arguably is the stock of the day. Honasa is a better performance across all metrics. IT stocks are off the low point of the day, as we pointed out to you. Disruption fears though continue. Eternal profit booking is seen. PI Industries, a degrowth is seen in the agrochemical business. Praj Industries is losing on account of volumes, as well as probably profit booking, because earlier in the trading week you saw significant gains for Praj Industries. Of course, the earnings have come through and the margins have contracted by about 230 basis points or thereabouts, and NMDC is seeing volume pressure as well. We've got Mr. Chokalingam joining in this afternoon. Mr. Chokalingam, thanks so much for taking the time. Of course, the founder and managing director of Economics Research. What do you make of the bounce from the bottom for the IT pack as a whole today? And I know that you don't pay too much attention to individual days and moves, but one must make the argument of whether or not a bottom has been found, particularly with regard to the valuations of some of these companies.
Yeah, just on a lighter note, I do see on a daily basis also, because volatility is so much. In a single day also stock falls 15%, and that was supposed to be the long-term average from the stock market.
That's fair. No one blames you, Mr. Chokalingam.
So our life has become very stressful. You have no liberty to relax. So on lighter note. So yeah, I definitely, I am not the expert to decode the impact of AI on Indian IT service companies. But with my experience, with a little bit of common sense approach, I still believe the market is overreacting to, this AI impact on IT stocks. If you remember, maybe a month or 2 months back, similar episode happened, and the AI fear cropped up and all IT stocks crashed. And from there again, they all recovered 10-15%. So there could be impact, there could be marginal further degrowth in the year-on-year dollar revenue export. But I don't think this is going to be very serious crisis. So that is the reason I believe some bargain buy started coming. The second view is that even the product companies like Oracle Financial Software, they are all impacted very badly. But I have a strong view that people are not going to use AI tool to do away with banking solution products, because banking industry is very very highly regulated and sensitive. So you can't take a risk. You have to go for a well-established vendor who provides you the total solutions. So I believe it is overplayed in a product in the segment. And third, I believe that some of these small and mid-cap stocks can be a target of further merger and acquisition. This is what precisely happened for 2014 to 19 when industry struggled with a poor single-digit growth. Now I think there is a more opportunity to consider that kind of mergers, acquisitions, and consolidate the business at least through unorganic route. So these are the reason I believe even I was tempting to renew my buy call first off.
We've also got Kunal Shah, Senior Technical and Derivative Analyst at Mira Asset Sharekhan, joining in. Kunal, a very quick view on the benchmarks. We're still trading at pretty much the low point of the day, down about 1% or so, but the Nifty IT off the low point, and that certainly is some good news.
Yeah, good afternoon, Alex. Good afternoon to everyone. I think, the tariff gap of opening what we had got, we were not able to surpass the all-time high. So that was again a strong resistance for the market. Overall, we feel that February could be a month where we would have some sideways consolidation into the markets. What everybody is eyeing for the budget day high, that is 25,450. And I think that would be breach in panic. But how we recover from those levels is very important. That is where also the Nifty 20 DMA is placed, which is placed at 25,470. So I think there are multiple support zones on the downside. Again, that will be tested on the downside. If we are able to hold that support zone, manage some recovery from those levels, then probably we can say some pullbacks could come in. Overall, the sentiment has been on the negative side once we broke that 25,700, 650 support zone on the downside. So yes, 25,450, 400 is what I'm eyeing on the downside for the Nifty index. So the view remains from a short-term perspective on the bearish side. Now for the Bank Nifty, this has been the outperformer, but the last 3 to 4 days consolidation has been broken on the downside in today's trading session. 60,300, 400 was the support zone that got breached. So probably Bank Nifty would be heading towards the 20 DMA, which is placed at 59,700. And that is where Bank Nifty will find the next support zone. So 59,700, 59,500 is a very crucial support zone for the Bank Nifty. If we breach below that and in the coming weeks, then probably you will see the trend reversing for the Bank Nifty. Overall, the structure is still bullish for Bank Nifty. Buy on dips. Dips towards the support zone would be a good opportunity, not at the current levels.
Kunal, I must say I love the look. T-shirt with a coat looks particularly savvy heading into the end of the week. But having said that, what are the picks that you would have for today on the basis of technicals?
See, I think overall the sentiment continues to be on the negative side, and I have two calls. One I'll see on the buy side, one on the sell side. So first I'll discuss the sell side idea. So here what I have picked up is from the defense space, Mazgaon Dock. Again, clearly the structure is getting weaker and weaker. After even the budget, we didn't see any buying momentum coming up into the stock, and the stock has been trading below the short-term moving averages. So here it's a sell for me, Mazgaon Dock at the current levels, with a stop loss of 24,050 on the upside, and looking for targets of 2280 to 2250 on the downside for Mazgaon Dock. So that's a sell for me. On the buy side, I have one buy idea. I think auto still looks bullish to me from a short-term perspective, and here the momentum could continue on the upside. So for me, from the current levels, the auto stock which I am liking over here is Maruti. Again, the structure is still intact. There is a resistance around the mark of 15,300. So this will be a conditional buy. 15,268 is where Maruti is currently trading. So once we break above 15,300, go long on Maruti, keeping a stop loss of 15,200 on the downside, and looking for targets of 15,600, 700 on the upside.
Right, so these are the picks coming in from Kunal, but today's stock of the day is Muthoot Finance. Now, of course, the numbers came out very good. Q3 numbers are very strong, but the stock tanked, more than 11% of an intraday fall. And today also, we are near this day's low level. But what are the key reasons for the fall in the stock? The first one is, of course, a profit booking coming in. The stock has given us solid returns to the investors. going ahead. And the second important reason is your valuations. That has been a concern. They have been on the higher side the way the rally has happened in most of the gold financing stocks, and that is why the concerns have been coming from the brokerages. The third point why Muthoot Finance is cracking in trade is because the standalone AUM, the numbers which are there, that is lower than what the street was estimating. The fourth point is, of course, the concerns also coming in because of the core NIMs. They fell in sequentially as well. That's what management also stated. I'll get you more on that. And the fifth important reason is Morgan Stanley. They have downgraded the stock to equal weight. Even the target price has been cut to 4,500. So broking houses are not giving that much kind of, upgrade in this counter. So largely some downgrades are coming in. But to give it more perspective, I had a chat with the company's MD, George Alexander Muthoot. Listen in to what he had to say.
The quarter four also is looking quite good. The gold price is even now, even at $5,000, etc., it is very well, still very elevated. If you look, the last 1 year, the price has gone up by 80%. So probably there is a lot of headroom there. Again, as I said earlier, this is not the gold price which is creating the demand. It is the demand for funding or the need for funding which is creating the demand.
Okay, Mr. Chokaling, I want to ask you about this because the point that Mr. George Alexander Muthoot is making on the tonnage is, and this is what a lot of people focused on, the fact that for them the tonnage has actually fallen on a year-on-year basis. The point that he's making is that because the value of gold has gone up so much, people don't have to use that much tonnage, right? They don't have to use that much gold as a collateral. But what do you make of the numbers? Is it more of a valuation catch-up where people are saying, okay, enough is enough, it's unlikely to go too far at this point, let's just book out at this juncture?
Basically, you are absolutely right. When value has gone up, our tonnage comes down, but that should not be a cause of any concern because, margins are very adequate by these lenders and there is huge appetite. My concern is different. Now, if you look at Muthoot Finance, the 10-year compounded profit growth was 23%, but last 5 years, it slipped down to 11% CAGR in profit growth. Last 3 years, it has come down to 10%. This definitely indicates, corroborates the structural change happening in the gold loan industry. The last 10 years, a lot of NBFCs have jumped into this. A lot of banks have jumped in. First private bank, then even the public sector banks. I believe Central Bank of India has got a huge book. Perhaps that is the highest in size of the value. So what it means, there's a tremendous structural change. The competition intensity has increased tremendously. So even for one of the most efficient firms like Muthoot Finance will have problem in the future. So that is why it is correcting because it's already now after the fall also it is trading at the 4 times book value. I think which is very, very fair or maybe even little stretched. There could be further scope for another even 5-10% correction. That's my view.
So, Mr. Chokalingam, any kind of a buy if it's any gold financing company or you'll wait it out?
I would not rush to buy gold finance companies now because all of us know the way the gold prices have gone up and of late the volatility. If 1 or 2 central banks start selling gold, there can be further huge downside volatility. So that can sentimentally impact gold loan companies. I would rather play PSU Bank, which have got a very sizable gold loan book and also other lending. So that would be my preference instead of at this juncture, chasing the pure gold loan companies.
Now let's move on to the F&O buzzers. First one is long build-up, and that's definitely coming in for Bajaj Finance and Eicher Motors. That's where our focus is. Short covering, that's coming in for Piramal Pharma and Hindustan Aeronautics. While long unwinding, interestingly, BSC and Kalyan Jewellers have made it to the list. A little bit of volume build-up also, and short build-up, of course, we just discussed Muthoot Finance. Apart from that, NMDC also comes in. Interestingly, NMDC is something which I'm looking at. The stock is down 6-odd%. A quick technical view from Kunal on NMDC.
I think, for NMDC, I think that resistance is still acting on the upside around 84, 85. That has not been taken out. Overall, the larger term trend is still positive for the stock. But I think from a short-term perspective, there will be some pain points coming in for the stock. The lower end support from where the stock has seen the buying interest is around the mark of 77, 76 zone. So probably a dip towards those. Any reversal from those levels would be a good opportunity to again see on the long side. 85 is what has been a strong resistance. Once that is taken out, then probably one can see a good move on the upside towards 90 to 95 levels.
Okay. All right. So that's the view on NMDC. Let's go across to Somit now to get a sense of what the dealing room check is telling him. And really, it is, I would be very keen on understanding, Somit, if there's any buzz on the IT pack, because you've seen a pretty smart recovery from the low point of the day.
Yes, in fact, Nifty IT is on top of the list. When I inquired with dealers, the buzz on the street is that whatever recovery that we have seen today from the day's lowest point is largely led by buying action that we are seeing on the DI desk. It's not FIs have not participated much in the buying action. DIs have led the rally from the day's lowest point, specifically for the Nifty IT index. Apart from that, couple of stocks that dealers have highlighted. Firstly, on Aarti Industries, there are sell flows on the large HNI desk. Dealers are highlighting concerns related to pricing pressure for one of its key products. The stock is down nearly 4% in trade today. And when it comes to Paytm and SRF, we are seeing some buying action that is happening. Some buy flows on the institutional desk at lower levels for both the counters. We have seen some recovery as well for both the names, and even the delivery volumes are expected to be on the higher side. Both FI and DI have bought in some quantity in both the names, that is Paytm and SRF.
Thanks a lot, Somit, for that. So Chokalingam, I want to get your views on Aarti Industries. Its peers, even Acuitas and everyone else did a really strong quarter this time. But Aarti Industries, a very weak set of numbers and sustained selling also coming in. How are you looking at this counter, Aarti Industries?
Yeah, it's unfortunate that the margins have been going down over the years. It used to be around 28% in FY22. In the last 5 years, it has come down as low as 14%. And despite growth happening, the margin is not expanding. So that shows a tremendous pressure on the realization. And now, even after the steep correction over the last 2-3 years, stock is still trading at around 44 PE. So at best, I would hold it, and I would wait for some turnaround in the realization before recommending a buy call on Aarti Industries.
Okay. All right, just above 25,500 for the benchmark Nifty 50. I wonder we hold on to that at this moment. But let's talk about individual counters. And so Kunal, this is part of our rapid fire round. So you'll have to give us a buy, sell or hold recommendation. I'll read out the stock first. KPR Mill is the name of the counter. The shares actually rose 9.2% intraday, come off that point at this juncture, about 5% higher. But the trading volume is also pretty high. What would you do?
Yeah, I think definitely I'll continue to hold the counter. If I look at the long-term charts, 790 has been a very strong support for the stock. We have seen some bounces from those levels. Now the immediate hurdle for the stock on the upside is placed at around 1,000. And once that is taken out, then probably you will see the move coming swift on the upside towards 1,100. So larger term structure is still bullish for the stock till the time 790 is not taken out on the downside.
Okay, all right. Let's talk about Vardhman Textiles next. And this is a counter that also gained quite considerably, about 7.6% intraday high, but it's now up about 4.5% or 4.3%. Traded volume is also 3 times the 20-day average. Would you hold?
See, I think, yeah, definitely I'll hold it. Again, these are all the tariff stocks, what you have been talking about. But I think Vardhman Textile looks the most strongest from those pack. And I think overall on the long-term charts as well, I think the structure is quite bullish. Even if you get any dips toward the support zone of 467, 470, that would be a good buying opportunity. Overall, I feel the stock has the potential to go towards 570, 600 on the upside.
Okay, 1 month, 21% higher. Signature Global is the third stock on the list. The stocks rose as much as 6% or thereabouts. It is still higher by over 5%. Again, traded volume is significantly high and the stock is up as much as 17% in just 5 days. What would you do?
See, I think overall what we have seen in the Nifty reality space, that has been a dampener, and we have seen correction from the higher levels. Again, there was a pullback, but again, we have seen some loss of momentum. So probably for Signature, you can still see some up towards the mark of 1,050, 1,070 on the upside, but that could be an exit opportunity. Again, the stock can see some good correction on the lower end towards 900, 850 zone. That is the support zone for the stock. So I think bounce towards 1,050, 70 would be an exit opportunity.
And Kunal, your views on Lind India, the trading volume is almost 5 times its 20-day average.
I think absolutely the view continues to be on the bullish side. The stock has been consolidating in a narrow range, and now finally we have got a breakout into the stock. The 6,300 resistance zone has been decisively taken out with volumes. So now the room opens up for further upside towards the mark of 7,700, 7,800 mark. So I think a good buy. Any dips also would be a buying opportunity. The resistance of 6,300, 400 will now act as a support on the downside.
And Kunal, your view on Blue Jet, a weak set of quarterly numbers coming in, and earlier today the stock fell 10%. It's the biggest intraday move, and it's a retreat also happened since the November 4th. Volumes also 4 times its 20-day average. Your views on that?
I think definitely the stocker had already reached the support a long time back around the mark of 600, and post that we have been forming a low top, low bottom formation. Probably we will see, since it's newly listed, probably 2 to 3 years back. So you might see the listing levels also getting tested on the downside towards the mark of 330, 320 on the downside.
Okay. All right. Now, the thing is, we've talked about individual stocks, but the story remains IT, right? And I'm just looking at the index right now. It's down about 1.3% or thereabouts. And if I try and find out what the recovery is from the low point of the day, it's still about 1,300 points or thereabouts from the low point. The persistent system has also actually recovered the most in the IT pack. There are a couple of stocks that are trading in the green. Persistent is one of them. Emphasis has also gained in the recent past, that is in intraday trade itself. There are a couple of factors that you should bear in mind. One of the notes that came through this morning, JP Morgan, on the IT sector was something that stood out. It says that AI fears are obviously driving that sharp correction, but IT firms remain the plumbers of the technology world. They're saying that advances such as Claude's co-work can accelerate complex tasks. Agentic AI can write a lot more software, but partnerships among AI tool and IT services firms are more likely, and that can create several new areas of work. AI will just be another tool to address more work with the same budget. But this will still need services firms. A reverse discounted cash flow suggests that stocks bake in a 4% terminal growth, and only with a case of more than 30% downside from yesterday's point when this note was written is when companies hit a zero terminal growth with no growth hereafter, which is not the case. And even that 4% terminal growth is actually pretty negative. Things are looking better than that, at least. And that's exactly what they're saying. Both those scenarios appear overly pessimistic to them based on the new AI work streams that are emerging and the likely cyclical recovery as well. Free cash flow as well as dividend yields scream deep value and are crossing levels prior seen during market dislocation events such as GFC as well as the global financial crisis as well as the COVID-19. If you take a barbell approach to buy deep value in large caps, it's something that you should consider doing. They are overweight in Infosys, TCS, Persistent and Sagility. That's exactly it. You're talking about a company like a TCS, which earlier today was trading at a dividend yield of 5%, which is incredible if you think about it. And these are companies that distribute 90% of their profits.
Yes, that's correct on that. And there is, to give it a little bit more flavor on our AI discussion, I think we had an exclusive chat with Intellect Design Arena's chairperson as well, and they are also doubling down on the artificial intelligence, the grade AI platform. Our colleague Danish spoke to the CMD Arun Jain. Just listen in.
What we launched today is Enterprise AI on tap. You just subscribe to the whole environment, and there's a full platform where everything is coming together. We are giving a 20 prefix agents in marketing, sales, in HR management. All those come free with it, so that he can start using within a 90-day, he can change his organization setup.
If you look at the entire AI for enterprise space, it is majorly dominated by the big tech companies that are there in India from the past many years. What sort of space do you feel they could be for companies like Intellect? How do you plan to grow big in the coming few years so that you can dominate in this particular market?
All the companies were small when they started. So we are not small. We are $300 million company, 3,000 crore company. So we have a cash of 1,000 crore. So we are not that small, but I think there is a potential to become as large as anybody else. It's a question of our vision, which will make a difference.
And so very lastly, what sort of investments can we expect from a company in expanding your own AI research and development and more investment in coming out with such more platforms?
We are continuing our investment, so we are not reducing our investment. Sometimes as stock price goes up and down, and because we slightly try to make more investment, India is investment resistant. Investors don't like investments, so it's okay for us, but we continuously making investment. So investment is never a concern for me. From last 10 years, when we were having a 250 crore debt in 2020, today it's a 1,200 crore surplus in 5 years' time. It's an outcome of the technology. So we believe the technology is the way to make it. So investment-wise, we are currently doing close to 300 crore investment per quarter, totally per year. So the question is 10% of our revenues are going to R&D. And this year we increased 200 crore new investment for 25-26, and that investment will continue.
All right, so that's a word from Intellect Design. We have to slip into a very quick break. On the other side, we'll get you a conversation with Zaggle, and also we'll get you the top trading ideas heading into the end of the trading week. Stay tuned.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open.
Welcome back to India Market Close, and looking at the markets, only the IT space we are seeing some kind of a recovery happening. Just pull up the Nifty IT index to see what's happening, but Nifty and Nifty Bank are still in the red and no major move of recovery coming in. Let's just put out the Nifty and Nifty Bank as well to see what's happening here. Both of them down by more than 1%. Now let's move on to earnings, and Zaggle Prepaid Services in focus. Let's pull out the intraday chart. It's down almost 6% in trade today. But joining us and giving us more flavor about the earnings and the outlook ahead, we are joined in by Avinash Godkhindi. He's the MD and CEO at Zaggle. Avinash, good afternoon to you. The first number is the Q3 numbers. They are significantly strong. 56% year-on-year basis growth, 22% sequential up move. Is it the festive-driven kind of numbers, or is it a structural run rate growth sustainable for this?
Well, thank you for having me on the show. It is, just consolidation that's happening in the spend management space where we are the market leader. It's as simple as that. More and more companies see value in what we do. And the fact that we monetize largely through transactions is the icing on the cake when you don't have to pay a very hefty fee and you're getting all the benefits. Who wouldn't like to take it, right? You're also, incidentally, NDTV is a customer. So we see customers all around us and, their spends are growing, their businesses are growing. They're moving more and more of their spends to our platform, because there's increased confidence and trust in the company and the platform. And we're seeing that benefit come through. Of course, festival seasons have a benefit in Q3, Q4 are always stronger for us. But hey, Diwali has not been in March last year, right? Diwali has always been in that, October, November phase. So the festivity has been there last year, the year before, etc. So there's always been a strong Q3 and Q4 numbers, but these are best ever numbers for us, and we are absolutely thrilled.
Some people were arguing that with the signing of a trade deal, the argument can be made for Diwali in February, if not March. But having said that, I take your point, Avinash. What I do want to know is, you've seen user growth of 17% year on year in the third quarter, and revenues growth 56%. That obviously means that per user you are earning more. So therefore the question is that average revenue per user expansion sustainable at this pace, or will it normalize at some point?
You think of it like this, right? Take our complete spends and the number of users that we have, and think of, on an average, how much you spend as a user. I'm getting a fraction of your business today, right? A tiny fraction, less than probably 5% on an average of the overall spends that a consumer makes. Because, mind you, we've now forayed into the retail credit card space through our TPAP, our acquisition of Zag.Money, which is a TPAP and a retail credit card. So overall, on the corporate side, how much of the average corporate spends that we get a small fraction. On the consumer side, we get a smaller fraction. So the headwinds, the headroom to grow is massive with both the B2B spends and the B2C spends.
Right, and Avinash, what would be the EBITDA guidance going ahead? Can we assume realistically it will cross that 12 to 13% mark before FY28, or will the incentives structurally cap the margins near 10 to 11%?
See, we've been very clear and vocal about it in our guidance that this year we'll stay in the range of 10 to 11%. Last year we were about 9 to 10%. And in the course of about 5 years, we'll hit about 14 to 15%. So there is going to be a steady, improvement in the EBITDA margins. Of course, it's not going to be a linear curve. There'll be some years where it's going to be better, and some years it's going to be a little slower. But overall, that's the end goal that we are working towards, and we clearly see we are on track.
Avinash, the question then is this guidance towards $1 billion in revenue. At what point do we hit that? 1, 2, I'm looking through the various heads that you have, right? So you have Green Edge, you have Tax Spanner, you have 86,400 you have Zag Money. What, according to you, would be the biggest EBITDA contributor going forward?
So on the $1 billion revenue, it's about 7 years that we're looking at. About 2032 is where we are looking at that number coming through, basically. And look, each of these acquisitions have the potential to really do phenomenally well. It's hard for us to pinpoint and say which of these are going to turn out to be extraordinarily, EBITDA accretive in the coming years. We expect all of them to perform very well. And some of the other acquisitions which, we've announced and are on the cusp of closure, and some others that we're looking at. But a lot of the EBITDA expansion and the growth is from the base spend management capability that we have as Zaggle, right? And we've not even looked at the international markets yet. So this is all domestic. And there's a huge amount of opportunity for us to go global and get much better margins in those markets as well.
And Avinash, the cross-selling is also something which is an important opportunity for your industry. In the third quarter, it seems the numbers have been inching up. Your targets for the fourth quarter or for FY27?
Well, cross-sell is an important thing. We have steadily improved on cross-sell, and as we explained in the last analyst call as well, our focus is how do we increase more billing or revenue from that particular customer. If I'm able to sell 2, 3, 4 products, 5 solutions, all the more better. So wherever we are seeing more momentum in terms of cross-sell, we are doubling down, quadrupling down on those customers. And the great news is that, there's been a change in the draft income tax guidelines that were announced, which is massive for the employee benefit business that we have. Both the new tax regime will have all the wallets now, the meal, the mobile, the fuel, the books and periodicals, as well as the amounts have been increased by 4 to 5 times. So what used to be 50 rupees per meal per day is now 200 rupees per meal per day, which is really, really a 4x jump just on that. And the base with the NTR coming in probably is another 10x growth. So it's overall a massive growth for that business. That business is a space where overall in our revenues is not very massive today, but with these changes can become very significant.
So obviously tough to quantify that, Avinash, and I was incidentally talking about this on our personal finance show yesterday, Your Money Matters. It's actually a good deal for a lot of people because ultimately the first change in over 10 years, and so inflation adjusted, right? Because meals don't cost 50 rupees anymore. So therefore, from that perspective, I'm just trying to, and you said that it could be significant, but is there a ballpark that we're talking about, FY27?
You do the math, right? I'm talking of 4x growth in the ticket size and 10x growth in the number of users who will come into the fold. And that's going to suddenly look much more sizable than what it is today, which is a small part of our revenue. But it can be, much more significant in the coming years. And this is something which, now that this change has come in the new tax regime, this is something that's going to stay. It's going to stay for a long time, is what our understanding is.
Margins like on that business?
Oh, it's hugely accretive. There is no, you were mentioning incentives, cashbacks. There's not much incentive cashback that you need to give there because the employee is already getting a tax break, so to say, right? So the cashback is not as high as required in other businesses. And look, you get entry into all these companies, you get all those employees, as your customers because they register for the Zaggle platform, the app, and that gives an opportunity to cross-sell the retail card and other products. So it's massively accretive for us.
Okay, so one would assume that since it becomes so much more lucrative, you would be going out and doing more partnerships. But thanks so much, Avinash, for taking the time. Pleasure speaking with you. Wish you all the best.
Thank you so much. Thank you.
We're joined by Sudeep Bandyopadhyay, who's Group Chairman of IndiTrade Capital. Sudeep, I don't know if you heard the last part of that conversation, but effectively we're talking about the changes that were announced in the income tax rules, which essentially are finally adjusting for inflation. A lot of these perquisites, if you can call them that, and among them are your meal cards, etc. Right? And Zaggle operates in that space. It's gone from 50 rupees per meal to 200 rupees per meal. So from that perspective, one would assume that more people will use these cards. What do you think of Zaggle as a business?
I think definitely it's an interesting business. They are kind of organizing a lot of things which were pretty disorganized, and they're providing the customers and the related companies significant convenience, and they're charging a small fee for that convenience, which I think companies are happy to pay. So it's a business which has got a significant potential, and as the company management was mentioning, apart from India, there is obviously significant scope for expansion of their services into global markets, at least in the Southeast Asia and West Asia, where they can get a lot of traction similarly. So yes, potential-wise, there is significant potential for growth. The only one thing which kind of worries us at this stage is what is happening around us, which is AI. Now, with the artificial intelligence related tools coming to the market, how relevant these companies will be, how quickly they will be able to adopt to these AI models and bring those models, use those models, I think we have to see. As far as AI is concerned, it's very difficult to predict which way things will turn out for some of these companies like Zaggle, because definitely repetitive tasks which can be automated, can be kind of structured through technology, will be the kind of low-hanging fruits for AI.
It's the point being made by Sudeep. But let's move on to an interesting segment, the result of the day. And Jasmeet is here with us. Jasmeet, which stock have you picked?
Well, sure. Thank you for that. A couple of very interesting stocks for today, actually, and both of them are buzzing in trade. Starting with the first one, I have G Power on my radar. If you look at this particular counter, the stock is up about 20% in trade today. It had its all-time high, but the stock has also hit 20% high yesterday in trade. So in the couple of days, stock is about 40-odd%, and in the month, the stock is up 50-odd%. Company sees a great quarter, strong great numbers coming in for this particular quarter. Well, what has happened is company has seen a double-digit revenue growth, which has led to the overall top-line movement, which is up 22-odd%. On the other hand, the EBITDA also expanded considerably on the back of better cost management. Well, if we look at the bottom line, the profit also sees a huge jump from the previous year Q3 to this year Q3 on the back of reduced overall expenses. If you look at the key numbers here, we see that the overall revenue is up 21% at 385 odd crore, which is a good jump. But the interesting one is the EBITDA. EBITDA is at 124 odd crore versus 3.7 odd crore in the previous quarter. If you look at the overall margin, from 1% margin back in Q3, it has jumped to 32% margin in this particular quarter. And that's why we can see all that rage in the stock up about 40% in last 2 days. If we look at my second counter, I have Engineering's India. While if you look at this particular counter, the stock is up 15% in trade today. Further, it's up about 7% in the month, and over a year, it's up 26-odd%. Has had a good journey so far, but this today's trade is something to watch out, given it's up about almost 12 to 15-odd% in trade. Well, what happened in this particular quarter is, again, company sees a strong Q3 coming in terms of the consultancy business, which led to the overall up move. In terms of the other gross margin, it contracted in this particular quarter, which came in a bit lower. The order wins also saw a slight downtick in this quarter, but still the overall top line had a good moment. The order book currently stands at 12,500 odd crore, which is roughly 3.31 times the TTM if you look at the overall revenue size, which is indeed promoting the overall top line growth. And that's why we see the buzz in the stock up about 12-odd%.
Got it. Okay. Quick view on the charts, Kunal, on these two stocks, particularly Engineers India. Do you buy into it right now?
Yeah, I think for Engineers India, already we have seen a good run-up in today's trading session. Now the resistance where it is placed at 210. We have seen earlier that has been a selling point for the stock, and today we exactly made a high of 210 on the upside. I think sustaining about these levels is very important. If we sustain about that, say in the next week, then probably we'll see a more rally towards the mark of 220 to 30 on the upside. However, my approach would be as a buy on dips, or dips to be utilized as a buying opportunity over here in this stock. The support what on the technical charts on the lower end is placed around a zone of 190. So I think 190 would be a good point to add on to the stock. It can go towards 210 again on the upside, and once it sustains above that, then 225 could be achieved on the higher end.
Okay, and what about the BTST picks that you might have today?
See, I think for the BTST picks, one stock which is looking positive over here on the technical charts is Federal Bank. So Federal Bank again has been consolidating at the high level, sustaining above the 20 DMA as well in a weak market, and we expect this momentum to continue on the higher end as well for the stock. So that is looking as a buy for me. 288 is where it is currently trading. One can keep a stop loss of 284 on the downside. Look for targets of 293 to 295 on the upside.
Okay. Now, you guys don't know this, but I've known Sharad for about a decade now, and I know what his first love, who his first love is.
My first love is Sukanya. It's been 10 years.
But that's what you're telling her, but your first love is actually stocks, aren't they?
Equities, especially small caps.
All right, but obviously everyone knows what we're talking about. It's Valentine's Day tomorrow, and Sharad's got a very interesting piece for you. He's talking about the stocks that analysts love. Let's look at it.
Okay, so there is a vibe of Valentine's Day, and I'm here to get you the stocks, but these stocks are loved by analysts. Now you must be wondering, till when is the relationship going to go? At least for a year. That's why I've taken the 12 months return potential. But let's just see which are the stocks which are being loved by the analysts, and I've taken the first one is Mrs. Bector's Food. Now, interesting point about it is the growth momentum is likely to improve in FY27. The second stock which analysts are loving, this includes Vedant Fashion. Now, they're getting in the new brands, and the SSG growth is also coming in. That is why the number you're looking is at 55%. The third one, it's very much interested, and that is Info Edge. Now, 99 Acres and Jeevan Sathi, all of them are continuing to do well. And overall, remember, there's a market share gain also happening. The fourth stock, which is being loved by the analysts, is Team Lease Services. They are going to benefit from the GCC expansion. The management has been bullish also. Spreading love, the fifth stock would be your PNC Infratech. Interesting from the infra space. They are broadening their bidding focus and they are going beyond the roads. The sixth stock, which analysts are eyeing, this is Suntech Realty. That's a 48% return potential they are expecting, and a strong launch pipeline is there which will drive growth going ahead. The seventh stock which makes it to my list, and it is 5-Star Business Finance. The MFI stress that is actually coming out, and that's a key beneficiary for the stock. The eighth one, and we are getting closer to the Valentine's Day list, is Vatek Baba. There's a strong execution and a healthy order pipeline coming in. And to almost wrap it up, the ninth one is your Aptus Value Housing Finance, another BFSI name. The return on asset is something which the analysts are very bullish on. And the last one in the list is Zensa Tech. That's almost 42% return potential. And remember, 20% of this order book is now AI influenced as well. So in Valentine's also, there is an influence of AI. And whatever the Valentine's Day you celebrate, be it with friends, families, or even yourself, do have a good time with that. But Sudeep, in this Valentine stocks which I have taken, what would be your favorite pick? And only these 10 stocks I'm talking about.
Well, I think, I do like Vatek Baba, and I've been recommending it for quite some time. I think it's a very, very interesting business, which is absolutely the need of the hour. And globally, it's expanding its business. They had certain challenges in between in West Asia, but that has been overcome. Execution has been strong, and I think I completely endorse the love which some of the analysts have shown for Vatek Baba. The other segment I like to talk about, in 5-Star Business, I think the kind of remark which came is MFI business is improving. I think in that context, what one must remember is one can look at buying pure play microfinance companies, and Fusion Finance is one such company which I think has got a significant upside from current levels. Yes, microfinance business, the green shoots are visible, asset quality has improved, disbursements are going up. And remember, this was a completely bombed out sector for the last almost 2 years. So I think there is significant scope for growth in the entire MFI space. 5-Star, yes, and one should look at Fusion Finance as well.
I do want to ask you, Sudeep, about another stock that is doing particularly well. And from what I can see, it's been 2 quarters in a row for Linde India where you've seen significant profit growth. And of course, the second quarter, the margin expansion and the level that it reached on margins was considerably higher than what you see even in Q3. But the stock is reacting positively, 7.4% higher at this moment. Industrial gases is what it plays in. What would you say about this particular stock?
It's a fantastic stock. It used to be British Oxygen, and from there the acquisitions led to this Linde Avatar. But it's a fantastic business. Look, if there is an industrial activity which is picking up, the steel, iron ore, and all other related industry are the users of their gas. And with industrial activity picking up, and the way the economy is poised with expectation of further industrial activity picking up, I think they will have good time. And the competition is not really there. They're the clear leaders with a significant stronghold in the market. So yes, as far as Linde is concerned, it's a good stock to buy and hold from a long-term perspective, from a investor's portfolio point of view.
Praj Industries is a stock that has had a pretty volatile week, and I'm sure that you can't say that this one alone has. Quite a few stocks are in that basket. But Kunal, the drop that you're seeing, despite that, the gains are 7%. Would you book out at what, 6-7% lower at this point, nearly 7% lower intraday? Should you take your profits off the table if you have some?
I think definitely. If you have some, definitely take some profits. A fresh buying entry, I would recommend only about 350. If that is taken out on the upside, then probably you will see the buying momentum coming back and the stock heading towards the mark of 435 on the upside. So from the current levels, yes, I think even any dip, even if you get, or any bounce what you get, I think that would be a good opportunity to exit the stock.
All right. Sudeep, a very interesting sector is the power sector. Overall, the demand, the monthly demand is at a 15-year high, the January data we checked. And Rupesh Sankhe in IMO, the Indian Market Open Show, also has stated that the transmission segment is also really doing well. I just wanted to get your view on this, fundamentally on the space, and any important stock pick which you are bullish on in this power or this power ancillary theme.
Well, I think we have been positive on the entire power sector for the last 1.5 years. But unfortunately, the sector hasn't given great returns to the investors during the last 1.5 years. So it's a little unfortunate. But structurally, it's very, very positive. And we are looking at, next 5 to 10 years, this sector having a positive traction structurally. Every segment the power industry should improve. The kind of new capacity which is coming up, the way the demand has picked up, I think is absolutely amazing. And every segment will benefit, but we are probably a little biased towards the financials. So PFC, REC had been on our radar for some time, and with this merger, which is going to happen, it will become a stronger and better institution. So PFC definitely is worth picking up at current levels from a long-term perspective. As far as the generation companies are concerned, we have been liking NTPC for a very long time. They are undoubtedly the leaders with backward-forward integration, expansion into green power. They have the traditional energy as well as the green energy. Expansion of 30 gigawatt is coming. So it's very well positioned. Prices are not cheap. It has moved up quite a bit, but even at current level, from a long-term perspective, it does look very good.
Okay. What if this entire pack, and it's quite a wide pack at that, Kunal. So on the charts, you've got quite a few to choose from, and the earnings season mostly out of the way. So no triggers from that perspective. On the charts, what looks good?
Yeah, I think firstly, I'll talk about the Nifty CPSE index, which is the power index. So I think already we have got a breakout into the stock last week, and now we are seeing some pullback action over here. So we might see the index, which is currently trading somewhere around the mark of 6,800, can have a decline towards 6,700, 6,650 zone. And that's a very strong demand zone. I'm expecting a sharp recovery from those levels. The stock, again, which would be on my radar from the current levels as well, is Power Grid. It looks attractive to me. I think even declines towards the support would be a good opportunity to add on to Power Grid as well. On the weekly charts, we have seen a strong breakout as well. Now you might see some cool off coming for the stock towards the mark of 280, 270 zone. That would be a good buying opportunity for the stock. Overall, I feel this can go towards the mark of 320, 330 in the very short term. But overall, if you talk about the power sector, I think yes, Power Grid, NTPC, PFC, these are some of the counters which continues to remain as a buy on dip.
Interesting on that. Let's just pull up the benchmark indices, Nifty and Nifty Bank, to see what's happening there. There was a selling pressure last time we had checked, and now we are the day's low level when it comes to Nifty, almost 25,460 points, and even Nifty Bank, that's also seen a downtick, both of them trading in the day's low level. Kunal, any kind of an option strategy would be there here for Nifty?
I think for Nifty, I think one should go for a long spread. That is where we are seeing India VIX again bouncing back from the lower levels. And India VIX again had seen a good run up from the lowest level of 9 towards the level of 16. And now we have seen a low of around 10.5, and now we have seen a breakout above the level of 13. So I think India VIX would play a major role here with the volatility kicking in. And that is where one can go for Nifty, a long triangle strategy, where one can buy both the side options over here. One is for the Nifty currently trading somewhere around 25,500. So one can buy a 25,650 call option, which is trading at around 50 rupees. And one can also buy on the lower end a put option somewhere close to 25,050, which is all 25,000. Yeah, 50, trading at around 60 rupees. So I think both is a buy for me. Whichever side the momentum starts picking up, one will rise significantly, the other will fall much less.
Specifically on the banks and the underlying, Kunal, you're seeing pressure consistently on HDFC Bank, right? In trade today as well. I wonder where it is trading at the low point of the day. Pull that chart up. It is in fact trading at the low point of the day, 1.7% lower. And at the same time, there is a certain amount of positivity that's building into ICICI Bank. Does that continue into next week, do you think?
Sorry, that question was for me?
Yes, Kunal, for you on the charts.
Yeah. See, I think HDFC Bank, again, we call them the Karan Arjun of the Bank Nifty. So I think both are trading extremely on the opposite side. Again, for ICICI Bank, I think this resistance, the hurdle of 1440 is very, very important. If that is taken out, because we have seen multiple times sell off from those levels only, if that is taken out on the upside, then probably a big short covering move and ICICI Bank would be going towards the new high on the upside. On the contrary, where we are seeing HDFC Bank again breaking the lows on the downside, and even the swing low has been now breached. So again, HDFC Bank particularly is looking weaker on the chart perspective. One has to again see some momentum getting bought into, then only we'll see Bank Nifty coming back into the picture. For HDFC Bank, the lower end support is at 890. If that is also not hold, then probably HDFC Bank is heading also for lower levels. So if you look for the buy side, then my preferred bet over here would be ICICI Bank.
Yeah, Bank. Interesting question to you then, Kunal. But which of the two is Karan and which Arjun?
See, I think at the current levels, I think ICICI Bank is Karan and HDFC Bank is the Arjun right now.
Sudeep, do you agree with that distinction?
Well, I think I don't know, those attributes very well. But from my point of view, I think I'll buy in a PSU banking space, and that has been for quite some time. SBI came with fantastic set of numbers. Even now, the valuation gap makes SBI more attractive compared to some of these large private sector banks. If I have to buy a private sector bank today, I will probably go and buy Axis. I think there is some valuation comfort there.
Thanks a lot, Sudeep and Kunal, for giving your time and giving us both technical and fundamental views on the stocks. But back to the markets, and the selling has intensified. We are approaching the closing, and we had a minor recovery during the day, but now near the day's low for both Nifty and Nifty Bank. Look at the declines. That ratio is concerning. For the second straight day, we are seeing sell-off in the broader markets. Even Nifty Bank, if you look at it, that's where it's down almost 1% Mid cap and small caps, that's where the impact is there. Oh my god, mid cap is down 1.8%. And let's look at the small cap, that's also down 1.8%. So that becomes a key concern. Let's look at the stocks from the Nifty constituents to see where the action is. And lastly, we'll see a sea of green there. Of course, the names have interchanged from the IT players. Now we have the consumption names, Hindalco also making it to the list, but no major support coming in from Reliance or the big Karan Arjun as we are talking about. Bajaj Finance, it's holding the fort. It's up 3%. SBI Life and even Cipla are in the green, but look at it, almost 45 stocks, 90% of the constituents are in the red. Let's look at the sectors where the move is, and it's expected that all the sectors would be in red, and yes, all of them are in red. PSU banking, pharma, even they are not holding up. Amongst the biggest losers, this includes the MNC stocks, the PSE stocks, realty back into selling after some days of consolidation, and then metal pack, that's also down 3% odd. So of course there are concerns. The ending is on a weaker side for the market for both Nifty and Nifty Bank. Let's pull out the advanced decline ratio to show you how things have moved, and throughout the day, right from the start, and now also a minor recovery was there during the day, but net the advanced decline ratio is clearly in the favor of bears. Let's look at the BSE 500 stocks where the action was, and in Ingenious India, Lind, Ingersoll, all these are your result oriented moves, and some of the textile stocks from yesterday's rally are seeing a good moves coming in. But what's not happening right is Muthoot Finance, that's down 11%. Alchem Labs and Praj Industries also cracking in trade because of weaker earnings. So market is punishing weaker earnings, and only limited number of numbers are there which you would be focusing on. Of course, these are the important things which you should be watching out for, but it's Friday, and importantly, there's a favorite segment of mine every Friday. It's Popcorn Pulse by Shreyansi. Shreyansi, there must be a whole lot of list. This weekend, Valentine's Day is also there.
No, absolutely, and Valentine's Day is almost here, and so is Romeo on Popcorn Pulse. That's what we're going to be discussing right now, because Oh Romeo is actually the first movie that we're going to be discussing. Let's take a look at the cast though, because that really screams out to you. Shahid Kapoor is there, Tripti Dimri, you have Avinash Tiwari, Tamanna Bhatia, as well as a bunch of others. Of course, my favorite here is Farida Jalal, and I'm going to be watching out for her role as well. But this is basically based on a book called Mafia Queens of Mumbai by Hussain Zaidi, and this is also based in the Maximum City, so do watch out for this one. It is set to be a power pack performance. A little bit of a mixed review coming in, but has managed to book about 1.2 lakh in terms of the advanced bookings that you're talking about on day one. So do watch out for this one. The second one on my list is actually an OTT that I have watched, which is quite interesting in terms of the layered story, sort of screenplay that you have. It's a very dark-layered crime thriller that you have. There's a very important twist. There is a cameo by Jaideep Ahlawat as well. But the cast itself with, Barun Sobti as well as Mona Singh, some great performances, possibly a career best coming in for the male lead here. And you do have this particular whodunit that catches attention on the back of the underbelly of Punjab that they actually expose. So those are the couple of suggestions that I have for the weekend. But with that, it's time's up on this edition of India Market Closing. Thank you so much for tuning.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts.
Hello and welcome to Market Express. I'm Himakshi Bahugna. The markets have closed for the day and we are here to break down all the major moves, big headlines and also the stories that shape today's trading session. Let's get you up to speed with everything that mattered in the world of business, economy and beyond. And let's see how the markets have fared today. First, so Nifty has ended the week in the red and well below the 25,500 mark. Sensex also sheds more than 1,000 points. And this was a volatile week that ended with the advanced decline ratio tilted sharply in the favor of the red. Talking about the sector, so all the sectors have ended the week with a shade of red. So it was metals that was lost a lot of sheen, with a cut of over 3%. Realty and energy, however, remained weak, and IT has scripted a recovery from the day's lowest points only to end the day and also the week in the red. Now let's look at some stocks that were buzzing away in trade. First up, we have Engineers India. So after delivering a blockbuster Q3, beating the estimates across the board, a robust consultancy business has helped power 58% of revenue growth, coming in at 1,210 crores versus 765 crores last year. EBITDA has also surged nearly 260% to 352 crores, with margins also expanding massive 1,630 basis points to 29.1%. Net profit was equally strong at 347 crores, which is up from 109 crores. However, the quarter wasn't without pressure. Order intake has fallen sharply by 73%, though the company still sits on a healthy order book at 3.3 times trailing revenue. Next up, we have Honasa Consumers. That was also buzzing away in trade with a gain of over 3% after the profit surged to over 50 crores. Now, this surge was driven by robust operating performance. Revenue jumped 16.2% to 602 crores, which is up from 518 crores. EBITDA has seen a massive 150% leap to 65.4 crores, and this is pushing the EBITDA margins up by 590 basis points, now standing at 10.9%, which is nearly 11% versus 5% last year. The bottom line, however, has, it is seen some sort of, it's impressive there, with net profit soaring 93% to 50.2 crores as compared to 26 crores earlier. Brokerages, however, are taking note, with Goldman Sachs, hiking the target price to 330 rupees. Now let's look at Hindalco. So on the back of weak Q3 results, Citi has downgraded it to neutral from buy, and even as it raises the target price to around 1,000 rupees. And the brokerage says that the long-term structural story remains intact, but rising leverage is now a key concern, and also has flagged uncertainty around the insurance recovery linked to the Oswego fire, and also warns the cash flow impact could be higher than earlier expected. So Citi expects Novelis debt levels to climb over the next few years, which could weigh on the sentiment. Next up, we have Morgan Stanley, which has downgraded the Muthoot Finance, ratings to equal weight from overweight, and also trimmed the target price to about 4,500 rupees. Now, the brokerage says that while the headline numbers remain strong, the upside from the current levels looks limited. It has also nudged up earnings estimates slightly, but believes that valuations are no longer attractive enough. And the firm also sees some sort of limited room for further upgrades over the next 2 financial years. Keeping with the brokerage notes, we have, Jefferies. So HAL has been in the spotlight amid news flow. So Jefferies has maintained its buy rating on Hindustan Aeronautics Limited with a target of 6,220 rupees, implying nearly 50% upside. Now, the brokerage has said that the stock trades at a sharp discount to peers with execution delays already priced in. And third quarter, numbers have beaten the estimates, and also revenue growth remains ahead of the guidance. Jefferies has also added that delivery of Tejas Mk1A over the next 6 months could actually trigger a re-rating with limited downside from the current levels. And keeping it going with the brokerage views, brokerages are turning bullish on Bharat Forge. Morgan Stanley has upgraded the stock to overweight and also raised its target price to 1,978, citing strengthening fundamentals. Meanwhile, Jefferies has said that the company's operational outlook is improving, prompting the brokerage to upgrade its FY27 and FY28 EPS estimates. Jefferies has also hiked its target price to street high, 2,150 rupees. Analysts are saying that Bharat Forge's growing defense footprint is also expanding total addressable market, and this is driving optimism across the board. Next up, we have Lupin. That has delivered a strong quarter 3. They have beaten the expectations on both the revenue and EBITDA side, and the quarter was powered by a robust, performance, with the company clocking its highest ever quarterly sales in the US market. However, growth in India was muted, largely due to weakness in the institutional business, and brokerages remain positive, with Morgan Stanley maintaining an equal weight rating, noting that the quarter's outperformance was clearly led by the US business. Next up, we have PI Industries. That has tanked in trade after posting a weak third quarter, with earnings missing the estimates as demand has softened, and it has hit the performance across its segments. Revenue has declined sharply, dragged by a steep fall in the agrochemical exports and also softer domestic demand due to weak farm activity and also adverse weather. So pharma revenue has also slipped on deferred supply, though the 9-month trend remains strong. Margins have contracted and also profit has fallen, but the company expects growth momentum to start building from the fourth quarter. Next up, we have Ipca Labs. That has delivered a strong quarter 3 performance, with net profit surging 31.5%, which is nearly 32% to 326 crores, and up. This is up from 248 crores last year. So revenue grew 6.6% to 2,393 crores, and this is showing steady top-line momentum. Operating performance, however, was robust. EBITDA rose 15.2% to 533 crores, and EBITDA margin has improved to 22.3% versus 20.6% earlier. So overall, if you look at, the company has posted healthy growth across profitability metrics with meaningful margin expansion. And your shares of G Power India has extended their rally for a second straight day, taking the 1-month gain of about 50%. Now, the surge comes after a strong third quarter show. So revenue grows in double digits, while operating profit also jumps sharply as other expenses fall. Losses from the discontinued operations narrow, helping the company swing from a loss last year to a healthy net profit now. And this is signaling a clear turnaround in the performance as well. Another stock in focus on the back of its quarter 3 earnings is Max Financial. And talking about the brokerage verdict now, Jefferies is bullish on Max Financial Services, maintaining a buy rating and also raising the target to 2,240 rupees from 2,130 rupees. Now, the brokerage has said that the company continues to deliver strong growth in quarter 3, and this is supported by healthy premium momentum. It also believes that valuations remain attractive, keeping Max Financial as its top pick in the life insurance space. Jefferies also added that VNB growth was driven primarily by the premium growth, and this is reinforcing confidence in the company's trajectory as well. Viewers, next up we have Inox India that has posted a strong third quarter with margins also expanding and revenue hitting a record high. Now the company also reports its highest ever export revenue, and this is driven by strong growth in the industrial gas segment and also fresh international orders. So engineered cryogenic solutions continue to see healthy traction as well, and order inflows remain robust, pushing the total order book higher, and while the export share also rises sharply year on year. Next up, we have Alchem Laboratories that has declared an interim dividend of 43 rupees per share, and this is the highest in the company's history. However, the stock was down over 6% in trade due to modest growth in the latest third quarter, but the company has also revealed a plan to acquire a majority stake in Occlutech, holding a loss-making Swiss company that manufactures minimally invasive cardiac devices. And quarter three numbers were modest, net profit up 1.6% at 636 crores, while the revenue rose 10.7%. EBITDA also grew 9% with margins slightly softer at 22.2% versus 22.5%. Now the quarter has also seen a one-time loss of 52.8 crores, and this is linked to labor code provisions. Now let's look at some corporate news. Viewers, Hindustan Aeronautics Limited has issued a strong clarification today on reports suggesting that it has secured a 3.25 lakh crore mega order for producing 97 Rafale M fighter jets. Now HAL has said that there is no such confirmed deal, and the company has only shared a quote with the Defence Ministry as part of a routine procurement procedures. Now the statement comes after market speculation around an unprecedented defence contract that briefly lifted the sentiment, and HAL has emphasized that any future order will be disclosed through official channels as required under the listing rules. And in another major development, the parent company of Insurance Dekho, Girnar Insurance Broker, is reportedly gearing up for a Mumbai IPO that could raise up to $250 million. And sources have said that the firm is in early discussions with investment banks and is also close to appointing advisors. Now, the offering is likely to include a mix of fresh equity and secondary sales by the existing investors, and the timing comes amid a softer IPO market with listings from iFinance and also Fractal Analytics seeing muted demand this week. And broader sentiment in Indian equities is also cooled due to slower earnings growth and also weaker foreign flows, even as hopes have risen after the recent US trade pact. Moving on, we have Bajaj Finance that is preparing for one of its biggest technology upgrades with plans to expand the AI deployment across the customer service and also internal processes. Now, the company says that it wants to 5 times, its call processing capacity by the next year, and using AI-powered voice bots and also automated resolution system. So, Bajaj Finance already, handles over 50 million customer interactions a month, and AI is also expected to sharply cut the turnaround time, reduce the cost, and also improve the accuracy in underwriting and also collections. Now, the lender also plans to integrate generative AI for back-end operations, creating faster workflows across the teams. Meanwhile, in the tech space, we have AI startup Anthropic that has finalized a major funding round worth $30 billion, pushing its valuation to nearly $380 billion. Now, the fresh capital will accelerate the development of the Claude family of models and also expand the commercial partnerships across enterprise customers. Now, this marks one of the biggest raises in the global AI ecosystem, and this is signaling continued investor appetite for foundational models despite regulatory scrutiny and also cloud infrastructure costs. And viewers, Google has rolled out a major upgrade to its Gemini 3 model, introducing the Deep Think capability that Sundar Pichai says is designed to tackle real-world reasoning challenges. Now, the newest version offers improved multi-step problem solving, stronger long context performance, and also more reliable outputs in the scientific and business tasks. Now, Google has said that enterprises will be able to deploy Gemini 3 across the planning, analysis, and also advanced simulations. And the update also positions Google more competitively as AI model capabilities accelerate globally, especially as companies demand the tools that can handle complex, judgment-heavy workloads. And viewers, Google is facing a fresh antitrust investigation from the European Union. Now, this time, focused on the pricing of its search ads business, and the EU's competition watchdog is probing whether Google unfairly bundles its search advertising services and also undermines the rivals by tying prices structures to its dominant position in online search. Now, the move comes amid growing scrutiny in the Brussels over Google's market practices. Now, the EU has previously fined the company billions for anti-competitive behavior. So Google has said that it will cooperate with the regulators, but insists that its advertising products benefit publishers and also advertisers alike. Now on to some national news, viewers. Prime Minister Narendra Modi today has inaugurated the Seva Tirth, which is the new integrated home of the Prime Minister's office, and he also unveiled Kartavya Bhavan 1 and 2. Now, the PMO says that the complex reflects a modern, efficient and citizen-centric governance model with the motto Nagriko Devo Bhava inscribed on its walls. Now, that essentially means citizens akin to God. And for decades, key ministries have functioned out of aging, scattered buildings across New Delhi, leading to inefficiencies and also rising maintenance costs. So Seva Tirth consolidates these functions into a future-ready, technologically advanced hub designed to streamline the coordination and also cut the administrative overheads. And Prime Minister Narendra Modi will visit Assam on February 14, packed with a day-long itinerary that includes major infrastructure inaugurations, public outreach events, and also development reviews. Now, the visit comes ahead of several key project rollouts in the northeast, with the government positioning the region as a central pillar in its connectivity and also economic growth strategy. So, PM Modi is expected to address a large public gathering, launch new welfare initiatives, and also review the progress on ongoing central schemes. And security and logistical preparations are already underway as the state gears up for the high-profile visit. And in a relief for commuters, toll rates on several partially operational expressways have been reduced following a review by the authorities. Now, this applies to stretches where construction is still ongoing or where full capacity has not yet been opened to the public. Now, this decision aims to ensure fair pricing until the highways are fully functional and is also expected to ease the travel costs for daily users as well. So, as long-distance freight operators, highway developers have been directed to update the rate boards and also ensure transparent communication at the toll plazas. Now, the government also said that the move balances user interest while keeping the project viability intact. And let's look at some legal news. The Supreme Court of India has raised serious concerns about the Real Estate Regulatory Authority, that is the RERA, saying that the body is doing nothing except facilitating defaulting builders. So it's better to abolish RERA. Now, the remarks came during a hearing where the court questioned why home buyers continue to suffer delays and incomplete projects despite RERA's mandate. And the bench noted that the regulator has failed to enforce accountability and has allowed, errant developers to misuse the procedural loopholes. So the court has demanded corrective action and stronger enforcement, stressing that the purpose of the RERA was to protect buyers and not shield the violators. And viewers, a major political shift is underway in Bangladesh, where Tariq Rahman, the acting chairperson of the Bangladesh Nationalist Party, that is the BNP, is preparing to take charge as the country's next prime minister. Now, this comes after the BNP claimed sweeping victory in the first national election since 2024 uprising that removed former Prime Minister Sheikh Hasina from power. Now, Tariq Rahman, currently residing in the UK, has maintained influence over the party's strategy and also candidate selection throughout the polls. And his ascent marks a dramatic turn for the BNP, which had spent years sidelined under Awami League rule. Now, reacting to the developments, Indian Prime Minister Narendra Modi has congratulated Rahman and also said that India supports a stable, peaceful and inclusive Bangladesh. Now, let's look at some global news now. US President Donald Trump is set for a high-stakes courtroom battle after a federal judge cleared his $10 billion defamation lawsuit against the BBC for trial in 2027. Trump has alleged that the BBC documentary falsely portrayed his business dealings and also political conduct, damaging his reputation and also influencing public perception during the 2024 cycle. Now, the BBC has stood by its reporting, calling the case baseless and also saying that it will vigorously defend the press freedom. And the BBC has said that they will also argue that Trump's suit fails to meet the high bar necessary for alleging defamation against a public figure. Now, the standard requires a showing of actual malice, meaning that the allegedly defamatory statement was made intentionally or with a reckless disregard for the truth. And viewers, the trade team of US President Donald Trump is working on a proposal to sharply scale back metals tariffs, signaling a major shift from his earlier aggressive protectionist stance. Now, according to the reports, officials are exploring narrower, more targeted duties on steel and aluminium imports rather than blanket tariffs imposed during Trump's first term. Now, the recalibration comes amid pushback from the American manufacturers who say that high input costs have hurt the competitiveness, and it also aligns with Trump's broader strategy of stabilizing the inflation by maintaining leverage in the trade negotiations, particularly with China and the key allies. And tensions in West Asia are heating up again after US President Donald Trump has warned Iran of severe consequences if it violates nuclear commitments. And the warning came following his White House meeting with Israeli Prime Minister Benjamin Netanyahu, where both the leaders have discussed escalating regional threats and also Iran's enrichment activities. Now, Trump has said that the US response would be very traumatic if Tehran moves ahead with what he called dangerous nuclear ambitions. And Netanyahu has welcomed the stance, urging coordinated global pressure on Iran. And the comments come amid stalled negotiations over a revived nuclear agreement and also rising flashpoints across the region. And viewers, the Trump administration has revoked the EPA's landmark 2009 endangerment finding, which legally defined the greenhouse gases like the carbon dioxide and methane as a threat to public health. And the move eliminates the scientific and also legal foundation for U.S. federal climate regulations, including emission standards for vehicles, power plants, and also oil and gas facilities. So President Trump has called the repeal the single largest deregulatory action in American history, while the environmental groups warn it will severely weaken America's ability to curb the climate change. Now on to some sports news. In a stunning turn of events at the ICC Men's T20 World Cup, Zimbabwe has pulled off one of the biggest upsets in recent cricket history, defeating Australia national cricket team by 23 runs. And chasing a competitive total, the Australian team fell short despite a disciplined bowling effort from Zimbabwe, who showcased grit and strategic execution on the big stage. And the result not only shakes up the group dynamics, but is also being seen as a major confidence booster for Zimbabwe heading deeper into the tournament. And for Australia, already one of the tournament favourites, this defeat raises questions about the middle order stability and also the execution under pressure. Let's look at some entertainment news as well. Shahid Kapoor and Tripti Dimri's Romeo has opened strongly at the box office, selling over 1 lakh tickets in advance bookings for day one. And the film's early numbers reflect solid interest across multiplex chains, giving it one of the strongest starts for a romantic drama this year. And trade trackers say that the advance booking momentum signals a potentially big weekend, especially with the strong youth appeal driving early sales. And cinemas expect further pickup, though through the day, and as spot bookings add to the film's opening tally. And with that, viewers, it's a wrap on today's edition of Market Express. Thank you for joining us. I'm Himakshi Bhaugna, but stay tuned to NDTV Profit for more news and updates.
Ladies and gentlemen, at the NDTV Profit Conclave 2026,
this will be a $30 trillion economy in 2047.
At this moment, as Finance Minister, what's keeping you up at night?
The uncertainties from outside are still where they were.
Can we see this deal through?
We are amongst the first to start negotiating. So our deal is very holistic, comprehensive.
The reason why we wanted to bring in this little increase was more for deterrent purposes rather than for revenue purposes. I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
The expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Nifty ends over 0.5% for the week lower. Sectors end mixed as Nifty IT leads the weekly fall to close 8% in the red. Broader markets show mixed performance. President Trump says USA's relations with Venezuela are extraordinary and he's dealing with Delcy Rodriguez very well. Meanwhile, Rodriguez says she's contemplating visiting the US. Google announces a major upgrade to its Gemini 3 Deep Think mode. Alphabet CEO Sundar Pichai says it will tackle tough real-world challenges as it's designed to handle situations where data is often messy or incomplete. From doubling of target for Lakhpati Didis to launch of Rahat scheme enabling life-saving protection for every citizen, Prime Minister signs key reforms after shifting to Save Our Teeth. Tariq Rahman-led Bangladesh Nationalist Party claims a landslide win as it returns to power 20 years after Khaleda Zia's tenure ended in 2006. Rahman calls for nationwide prayers instead of joyous processions. Hello and welcome. A very good evening, viewers. This is Profit 360 and I'm Malika Mishra. Along the next half an hour, we'll be taking you through some of the key updates on markets, national as well as international news. Let's begin with first checking how the Nifty fared, not just today, but also for the week. But if you talk about today, it ended up over 1.5% lower under 25,500 and the advanced decline ratio felt dramatically skewed in favor of the bears. Infosys and HCL Tech in fact slumped the most in Nifty this week, both dipping over 8% this entire week. My colleague Jasmeet now joins us to wrap the overall market action. Jasmeet.
Well, Nifty ends in red today. It's below the 25,500 mark, down about 1.5% in trade. If you look at overall the week, Nifty over the week also ends in red, down about 0.5%. In terms of broader market, they end on a mixed note. While Infosys and HCL Tech fall the most in Nifty, while Infosys and HCL Tech are down about 8%, we can see that the IT pack suffered the most as Nifty IT was a top sectoral loser during the week as well, down about 8%. While this pressure on Nifty IT comes on the back of the AI disruption where we saw over the week, the Nifty IT saw a lot of drop downs. In terms of the other key factors, Eicher Motor and State Bank of India are the two stocks that gained the most in Nifty, up about 10 odd %, while Nifty Midcap 150 ends in red, it's down about 0.2 odd %, while Coforge and KPIT are the two IT stocks again that fell the most in Nifty Midcap 150, while Coforge and KPIT fell about 10 odd % in this particular week. Nifty Small Cap 250 ends in green, it gains about 0.8% during the week, while Shipping Corp India, Engineering India gained the most in Nifty Small Cap 250. Engineering India gains the most on Friday on the back of the earnings which we saw. While in terms of the other sectorial mix, all sectors end on a mixed note. Nifty IT is a top sectorial loser. It falls about 8% during the week. While Coforge and Infosys fell the most in Nifty IT specifically, while Coforge and Infosys are down about 9 odd % during the entire week. In terms of sector that gained the most was Nifty PSU Bank, which is up about 5 odd %, and State Bank of India and Union Bank gains the most in overall Nifty Bank. While State Bank of India is up about 12 odd % during this week, Nifty Realty, Nifty Oil and Gas snaps its 2 week of gaining streak, while Nifty IT falls for second week in a row. In terms of Nifty Auto and Nifty Bank, they gain for second week in a row, while lastly Nifty Financial Services, Nifty Pharma and Nifty PSU Bank gain for second consecutive in a row.
Thanks so much for all the key highlights on the market action just made. But viewers, despite the dramatic wave in the IT sector, from tight bear grips to short breathers, Nishchal Maheshwari, market expert, has reasons to believe that this is not the bottom yet. He says the fear and worry now in this space is attributable to the lack of a clear growth plan for most of the software companies. Listen in to a brief portion from a conversation we had with him earlier this morning.
Market is driven by greed and fear, and at the moment basically what you're seeing is the fear. And when you have these kind of emotions, basically market tends to overdo it, and I think that's what has happened today. But it doesn't mean that IT is out of the woods and this is the bottom of the sector. I still believe basically there are issues which all these companies have to address, and they have to come back with a growth plan. Which at the moment I don't see most of them having it, and that's why I think the market is really worried.
Speaking along the same rhetoric, Moshe Katri of Wedbush Securities believes, and I quote, the IT doomsday scenario is overdone, end of quote. He further told us that revenue growth in the IT space is expected to happen without a corresponding increase in the number of employees. In other words, companies are likely to generate more revenue without significantly increasing their workforce. Listen in to his remarks as well.
The new model in this Gen AI environment is going to be probably going to be more, it's less going to be driven by hourly kind of fees, and it's going to be more focused on objectives. You have to reach specific milestones to be able to get paid. And on top of that, you will see a decoupling from headcount growth to revenue growth. And you're seeing that for some of the companies that are changing those models and adjusting those models. So it doesn't happen in a day. This is a multi-year cycle. And we feel that what we're seeing right now, this doomsday scenario, is definitely overdone. It makes no sense whatsoever.
And today we saw a real example of a company actually reporting higher productivity without a corresponding increase in headcount. I'm talking about Bajaj Finance, that is putting AI at the heart of its next leap of growth. Rajiv Jain, the company's vice chairman, put out some stats that truly reflect this AI-led momentum. He said that AI systems at Bajaj Finance has already catered to a whopping 20 million customer calls. And if that's not enough, they're now getting up to turbocharge that number to a bigger 100 million calls. Listen in to the management on the same.
AI listened to 20 million calls and converted voice to text and gave us data. Text to data conversion happened for 5.2 lakh customers, and as a result of that, we generated 100,000 new offers on which we did not have information earlier. So that's the way, and how you're seeing it move. That the first capability did not exist in Q1 and Q2; it just got deployed. So we'll be able to listen to 100 million calls next year.
And there's a new AI tool in the town. Intellect Design Arena today announced that Purple Fabric, India's judgment-centric full-stack open business impact AI platform, is now available as an enterprise AI. It is a subscription-based offering built on Purple Fabric AI platform. Subscription has been priced at 99,500 rupees per month, and the company is targeting MSMEs for this platform. Arun Jain, CMD of Intellect Design Arena, shared the company's vision for the next 6 months. Listen in to what he had to say.
Small corporates, SME will be the first set of market which we are expecting in next 6 months. They will be the first taker in this. It will come down to MSME afterwards. So that's our point of looking at the demand should be there. India Impact AI Summit, we are trusting that will bring a lot of awareness and lot of Indian media, the way American media promote companies, American companies, we need Indian media to promote Indian companies. That we are giving a challenge to America, and will be launching in those countries. At $2,000 a month, a platform is impossible. You have to pay $2,000 to one agent to get the meaning of it. So that's what we are disrupting the market, like DeepSeek has done for the China. We want to do from India. Enterprise AI is our space.
Let's now bring you some key corporate voices that we spoke to throughout the day. Muthoot Finance has delivered a blockbuster third quarter with profits nearly doubling on the back of gold-led growth and interest income write-backs. George Alexander Muthoot, MD of Muthoot Finance, shared with NDTV Profit the outlook going forward amid the gold price surge. Listen in.
The quarter four also is looking quite good. The gold price is even now, even at $5,000, etc., it is very well, still very elevated. If you look, the last 1 year, the price has gone up by 80%. So probably there is a lot of headroom there. Again, as I said earlier, this is not the gold price which is creating the demand. It is the demand for funding or the need for funding which is creating the demand.
It's Valentine's Day tomorrow, and we bring you the most loved stocks for the next year. A mix of consumption, tech, infra, and financial names that analysts believe can outperform by next Valentine's Day. My colleague Sharad Dubey joins us with the list and what's driving the optimism.
Which are the stocks which are being loved by the analysts, and I've taken the first one is Mrs. Bector's Food. Now, interesting point about it is the growth momentum is likely to improve in FY27. The second stock which analysts are loving, this includes Vedant Fashion. Now, they're getting in the new brands and the SSG growth is also coming in. That is why the number you're looking is at 55%. The third one is very much interested, and that is Info Edge. Now, 99 Acres and Jeevan Sathi, all of them are continuing to do well. And overall, remember, there's a market share gain also happening. The fourth stock, which is being loved by the analysts, is Team Lease Services. They are going to benefit from the GCC expansion. The management has been bullish also. Spreading love, the fifth stock would be your PNC Infratech. Interesting from the infra space. They are broadening their bidding focus and they are going beyond the roads. The sixth stock, which analysts are eyeing, this is Suntech Realty. That's a 48% return potential they are expecting, and a strong launch pipeline is there which will drive growth going ahead. The seventh stock which makes it to my list, and it is 5-Star Business Finance. The MFI stress that is actually coming out, and that's a key beneficiary for the stock. The eighth one, and we are getting closer to the Valentine's Day list, is Vatek Vibhav. There's a strong execution and a healthy order pipeline coming in. And to almost wrap it up, the ninth one is your Aptus Value Housing Finance, another BFSI name. The return on asset is something which the analysts are very bullish on. And the last one in the list is Zensa Tech. That's almost 42% return potential. And remember, 20% of this order book is now AI influenced as well. So in Valentine's also, there is an influence of AI. And whatever the Valentine's Day you celebrate, be it with friends, families, or even yourself, do have a good time with that.
While that is our most loved stocks list in view of Valentine's, India's data center story is accelerating with policy support, including tax exemptions for foreign users and surging digital demand from AI, cloud, OTT, and fintech. and it has beneficiaries span real estate, capital goods, network infrastructure, backup power, and whatnot. My colleague Varsha now joins us to decode India's data center leap. Take a look.
Well, data center is the next big digital wave, I would say, Alex. And, talking about why data centers are big now, as you rightly said, this is on the back of announcement of, tax exemption till 2047 for data centers for foreign companies using Indian data centers, which removes tax complications for global cloud players. Now, this encourages, global tech giants to store and process data, and hence India becomes a global data hub. Now, talking about the demand, so demand is actually exploding. If you see, the current capacity stands at around 1.3 gigawatt, which is expected to go to 5 gigawatt by FY30. Now, talking about who will be the beneficiaries, let me start with, real estate, wherein the spike in demand will lead to higher leasing, will lead to long-term rental income. And who will be the beneficiaries over here? If I were to talk about, you have Anantraj, you have Lodha, you have or the REIT players, I would say. Talking about the capital good, let's move ahead and talk about the capital good, the big capex cycle who will be beneficial, because this needs heavy infrastructure. So all your electrical equipment, you'll need transformers, you'll need cables, and this will lead to a growth of switchgear and UPS, and hence the companies which will be beneficiaries of this would be your Siemens, your ABB, your Polycab, your CG Power as well. Talking about network and IT infrastructure, you'll need more structured cabling, you'll need more fiber backbone, rack integration, and hence the companies over here, the company which will benefit is Black Box. Talking about backup and power, you need more genset and batteries, and hence Cummins will be the one of the companies which will be benefited. You have cooling segment, which is actually very important over here, because AI servers will generate huge heat, and hence you'll need HVAC systems, liquid cooling, precision cooling, and hence Blue Star and Voltas will be the key focus over here, because they'll make chillers used in data centers. Talking about lubricants and coolants, will be the silent winners over here. The specialty industrial oils will gain importance, and hence Castrol India and Gulf Oil will be the beneficiaries when it comes to this segment. Onto the renewable power, you have the data center, if you see, consumes massive electricity, and hence green energy demand increases. Long-term PPAs are being signed, and hence Tata Power, NTPC, Adani, green, and will be in focus. Lastly, REITs and financial sector, if I want to talk about, the DCs will give good steady income, and hence all the REITs and financial companies will be in focus. So all in all, I would say every sector companies will be in focus, considering the data center being the next digital wave.
Thanks so much for that, Varsha. While those were the stocks and the companies that you need to look out for as far as the data center space is concerned, let's now look at India's powerful power habitat. And I'm talking about the power sector. As per our research, India's power demand has surged to a 15-year high. In fact, consumption in January alone has hit a record 143 billion units, with strong growth across segments. This surge has been primarily driven by severe cold wave conditions in northern and eastern regions, which increased heating demand during the month. My colleague Sharad joins us back with all the details powering this sector.
It's a structural change which is happening in the power and the power ancillary segment, and whichever sector we are tracking, everything leads to the power segment. That's from where it starts. Interestingly, the macro demand has also come up, and this is for January. It has hit its 15-year high levels, and in terms of the units, it is the demand has come at 143 BUs. BUs is nothing but billion units in January month, and there are certain reasons for it. The important reason is there was a cold waves also. That's why the power demand went up, but there was a strong economic growth also which was continuing. So both of these engines fired together, and that's why we are seeing coal, hydro, nuclear, all these generation numbers actually going up. The real-time market volumes, they went up 53% on a year-on-year basis on their units, and the power generation, if you look at it, that went up 6%. Interestingly, there was a development in the renewable energy segment also, where the generation went up almost 10% and almost 39.65 gigawatts of renewable energy capacity was added as well. So of course, power sector, the macro numbers are looking good, and a lot of institutional interest is also coming in this power and the power ancillary space.
Thanks so much for that. And viewers, calling the proposed India-US trade agreement a new economic pillar in the bilateral relationship, India's ambassador to the United States and former Foreign Secretary Vinay Mohan Kwatra has said that the framework announced recently reflects a carefully negotiated, balanced and mutually beneficial outcome that protects India's core interests while opening up vast economic opportunities. In an exclusive interview with NDTV's Aditya Raj Kaul, Vinay Kwatra underlines that the agreement should not be viewed narrowly as a trade agreement. Beyond trade volumes, Kwatra also highlighted the strategic logic underpinning this milestone agreement. Listen in.
Let me begin by asking you about the entire trade deal and its significance. How important do you think at this time and at this juncture in history is this trade deal? कितना महत्वपूर्ण है इस ट्रेड डील का इस समय पर होना, जब 20 साल से हमने एक स्ट्रेटेजिक पार्टनरशिप देखी है, हमने बायपार्टिसन सपोर्ट देखा है इंडिया के लिए, और अब ये ट्रेड डील जिस वक्त आप वहां पर जो है मौजूद रहे हैं।
नमस्कार आदित्य, सर्वप्रथम धन्यवाद मुझे अपने चैनल पे निमंत्रण करने के लिए। देखिए, मेरी जो इस अंतरिम व्यापार समझौते का जो फ्रेमवर्क जॉइंट स्टेटमेंट के माध्यम से जो अनाउंस हुआ है, जो मेरा इसमें परिप्रेक्ष्य है, जो मेरी प्रतिक्रिया है, मैं कहूँगा ये केवल मेरी प्रतिक्रिया नहीं है, बल्कि भारतीय अर्थव्यवस्था में के जितने भी जानकार हैं, जितने भी इस रिलेशनशिप में स्टेक होल्डर्स हैं भारत की तरफ से, चाहे वो हमारे इंडस्ट्रियलिस्ट हों, चाहे वो हमारे सीईओ हों, चाहे वो हमारे फार्मिंग कम्युनिटी के मेंबर्स हों, किसान भाई हों, आप हर एक का जब लगभग सबका एक मत है कि ये उपलब्धि, ये अंतरिम व्यापार समझौते के फ्रेमवर्क की जो उपलब्धि है, ये अत्यंत महत्वपूर्ण है। न केवल भारतीय अर्थव्यवस्था के परिप्रेक्ष्य में, अपितु भारत यूएस संबंधों के परिप्रेक्ष्य में। मैं तो ये कहूँगा कि जहाँ तक भारत और संयुक्त राज्य अमेरिका की सामरिक साझेदारी है, उसके परिप्रेक्ष्य में देखें तो जहाँ तक हमारे आर्थिक सहयोग का प्रश्न है, ये व्यापार समझौता एक नवीन आर्थिक स्तंभ के रूप में, उपलब्धि के रूप में देखा जाना चाहिए। और इसके कई कारण हैं, ये केवल एक मौखिक टिप्पणी या नैरेटिव की बात नहीं है, ये एक तथ्य आधारित प्रसंग है जो कि जिसको समझना आवश्यक है। देखिए, ये जैसे कि माननीय वाणिज्य मंत्री जी ने बड़े विस्तार में कहा है कि इस अंतरिम व्यापार समझौते के फ्रेमवर्क के लागू होने के बाद भारत के निर्यात जगत को, भारत के व्यापार को किस प्रकार के जो हैं अवसर उपलब्ध होंगे। ये तो उन्होंने बड़े विस्तार से, बड़े विवरण में कई चैनल्स पे, आपके चैनल पे भी जो है स्पष्ट किया है। जो हमारी एग्री प्रोड्यूस हैं, वो प्रोड्यूस जो हम एक्सपोर्ट करते हैं, वो प्रोड्यूस जिसमें हम सेल्फ रिलायंट हैं, डेयरी का क्षेत्र। मैं इसमें इतना ही कहूँगा कि आप सब लोग जो हैं हमारे माननीय वाणिज्य मंत्री जी को अच्छी तरह सुन चुके हैं। उन्होंने पिछले 3-4 दिनों में एक्सटेंसिव इंटरव्यूज हर चैनल को दिए हैं, आपके चैनल को भी दिए हैं, और उन्होंने स्पष्ट रूप से कहा है कि जहाँ तक हमारे कृषि क्षेत्र में जो भी सेंसिटिव एरियाज हैं, इंक्लूडिंग डेयरी में भी, जो भी हमारे प्रोड्यूस हैं, एग्री सेंसिटिव प्रोड्यूस हैं, उनको पूरी तरह से सुरक्षित किया गया है। और ये निर्देश जो है, मैं कहूँगा उद्देश्य नहीं है, इसको हमारे नेगोशिएटर्स ने एक दायित्व के रूप में लिया है कि हमारे जो कृषि उत्पादन के, फार्मिंग कम्युनिटी के और डेयरी क्षेत्र में जो भी हमारे सेंसिटिव मुद्दे हैं, जिसमें भी जिस प्रोड्यूस में भी हम सेल्फ रिलायंट हैं, उनका पूरी तरह से संरक्षण सुनिश्चित किया जाए। ये माननीय वाणिज्य मंत्री जी ऑलरेडी कह चुके हैं, और ये ना केवल हमारे नेगोशिएटर्स का उद्देश्य रहा था, ये हमारा एक दायित्व था। जिस
Moving on, let's look at the big national headline. Prime Minister Narendra Modi's first set of decisions from Seva Tirth underline a renewed push towards inclusive development. These moves span healthcare, women-led growth, agriculture, and India's startup ecosystem. The PM cleared the launch of the PM Rahat scheme, ensuring accident victims receive cashless treatment up to 1.5 lakh rupees. This aims to prevent loss of life due to delays in emergency medical care. With 3 crore women already becoming Lakhpati Didis achieved ahead of schedule, the PM has set a bold new goal. 6 crore Lakhpati Didis by March of 2029, doubling both the scale and ambition of women-led economic empowerment. To strengthen India's farm infrastructure, the Agriculture Infrastructure Fund has been doubled from 1 lakh crore rupees to 2 lakh crore rupees, enhancing support for storage, supply chains and rural facilities. To accelerate innovation, especially in deep tech, advanced manufacturing and early stage breakthroughs, the PM approved the Startup India Fund of Funds 2.0 with a corpus of 10,000 crore rupees.